Good morning to you all. How many are there? You all are there? Good morning to you all.
Yeah, good morning, sir.
How many of you all are there? Can you just see how many have logged in?
It's only 30 at the moment, sir.
Three not.
Yes, yes, sir.
All right. Anyway, we can't wait for the others. I'm going to start because the reason is we have to ensure punctuality. So, good morning to you all. Good morning again.
Good morning, sir.
Good morning, sir.
Yes, thank you. Nice to interact with you all again. Actually, now I repeatedly told to ensure punctuality because we want to start the session on time at 8:30 because we have a lot of things to cover. And the participants also, I should say, they have no excuse because they are following from the comfort of their home. So I don't see why they are, I can't see any reason why we should wait for the people. If it is a physical session, of course, we have to wait because we understand the transport difficulties and all the problems. So since you have the luxury, all the participants have the luxury of following this particular session from the comfort of their home, punctuality is very, very important. Punctuality is very, very important. So, I am very thankful to the people who have ensured punctuality. So it's not fair for me. It's not fair by the people who have come to delay the presentation because time is very precious and today we have a lot of things to cover. So good morning to you all again. Today we are meeting in the midst of some green signals because the authorities have lifted some of the restrictions imposed which have come into effect from today. I think hopefully they will be having the exams also very soon. So these are good signs for us because when we started the session, the situation was very bad. So now the government has relaxed some of the restrictions. Vaccinations are being given. So these are all, good and positive signals for the country and also for the people. So now, my last session, I was talking about insurance. So even though you all were, I couldn't see your body language, but I got the message. I felt, you all were not in because we have come to the tail end of the previous session. So insurance is one of the important areas. So that's the reason why last week I stopped at 1:15 because I thought that, if you try to delay the session, prolong the sessions beyond the allocated time, some certain things may not go into your knowledge bank. So that's the reason why I thought I must revisit the site, my presentation covering the insurance because this is a very, very important area. I'm not going to go through any of the previous slides because of the time, and at the same time, these are all recordings are there. Even last night, I was able to go through some of the recordings and the slides. So therefore, I think it's not necessary for me to go through the session, go through those slides again. So now I will start from where I have stopped. Can you all see the presentation? Can you all see?
Yes, sir.
Right. Is there any problem? Please stop me up. Otherwise. Can you all see this particular slide? Can you all see? Can you all see?
Yes, sir.
Yes. Yes. Can you just tell me how many have logged in now?
46.
Right. Have you all visited this site and were able to download the questions?
Yes, sir.
Right. Very good. So we'll talk about it later. So now this is a very important area because insurance is a very crucial and important area in banking, because I have in all my sessions when I conduct these securities insurance, I used to share a lot of examples, like episodes which we have come across in our banking career, and also about the insurance, because insurance is a very important area. Banks are dependent on insurance to meet any eventuality. Now, see, even yesterday, I think day before, there was a major, the major turn in our weather pattern. There were heavy blowing, and in fact, yesterday we also didn't have electricity for about 2 hours, because I was told, when we contacted electricity board people, they said no, a lot of trees have fallen, so therefore they have temporarily disconnected the supply. So you could see, yes, this is a very good example for us. Nobody expected this type of change in our weather pattern. So nobody expected. I read somewhere about 550. You could see the presentation. It has gone also. Can you see?
Can't, sir. Can't, sir.
You can't see them.
Yes.
Right. You can you see now?
Yes, sir.
Right. So, so it was a very good, lesson for us. Insurance, fire or destruction due to natural calamity or man-made calamity could happen without any warning. So bankers have to be all extremely cautious to face such an eventuality which could arise without any notice, without any prior warning, without any notice, and without any prior warning. So supposing if you were a branch manager during this particular calamity, your heart will beat fast, because you have to find out how many of your customers are affected. Your portfolio, the assets which have been mortgaged to your bank, whether they are safe. So all so these are insurance is a very important area. That's what I have always been stressing. Even while I was working, I have never in my banking career, I had never ever released an facility pending insurance. Why? Because I had to be extremely cautious. I could remember in one of the banks where I was working, I could remember, the day they had the general election, the day they had the parliamentary election, there was a big facility to be released, some 200 million. The top author, some of the relationship managers, the people who were involved in that, they were coming and they were pressurizing me to release the facility, because we had restricted banking hours. And they said, boss, we will get in the insurance only tomorrow. We will be getting the insurance only tomorrow. Can't you release a loan? I said, no, I can't release a loan. Pending insurance, I can't release a loan. So it went even up to the director level. And the restricted banking hours, I left at about 3 o'clock. And 1 or 2 staff members were still there, but these people tried to pressurize those 2 staff members also to release. So they also contacted me and they asked me, boss, these people are asking us to release the facility. They said, tomorrow they will get the insurance. I said, no, don't release it. So we didn't release it. What happened? That following day was full day curfew. I think it was it happened to be a Friday. Then Saturday, Sunday holidays. Then Monday was the working day. Just imagine the plight, the risks you would have taken if we had released the facility pending the insurance. Why? Because during election activities, during campaign activities, you had to be extremely cautious. Now, some of these people don't understand the reality. They don't understand the risk involved, because during election time, campaign time, you have to be extremely cautious. I could remember when we were at HNB, whenever there is a election is on, presidential election or parliamentary election or whatever the election, we get special circular instruction from the managing director instructing us to ensure all our insurance policies are in force up to and after the conclusion of the election. If the policy was due for renewal on the 5th of January, we were instructed to ensure all these policies are in force up to at least another additional period. Why? Because in case during the election time, due to some problem, if they declare curfew, then we will most of our policies may expire. Most of our policies may expire. So to avoid that type of eventuality, to mitigate that risk, we have to ensure the insurance policies are renewed at least 7 days prior to the expiry. At least 7 days prior to the expiry. Of course, I have never released any facility pending insurance. People used to come and pressurize me. Sir, tomorrow morning we'll get the insurance. I said, no, I can't, we can't release it until you get the insurance. So if I release it, then I become the insurer. If I release it, I become the insurer. So this is very important for you all to understand. The insurance is one area you can't take a chance. So remember, if you are instrumental in releasing a facility, apart from all the documentation, ensure that insurance compliance is fully adhered to. Insurance compliance is fully adhered to, because that is very important. You can't take a chance. You can't take a chance. Now we discussed. I have already shown this to you all. I don't want to go revisit this particular slide, because there are some important slides to be, important areas to be covered. I wanted you all to concentrate on this particular slide, because this is also another very good example and eye-opener for us. Now you can see no limit. Man-made calamity, no limit building in Panadura was damaged. Because due to some problems, some mobs went and attacked them. They, the total loss was amounted to more than 300 million. Now here again, natural calamity, no limit, Ratnapura. Now yesterday, TV also, they showed Ratnapura. The town of Ratnapura is underwater. Certain areas are underwater. So this particular slide is a very good eye-opener for you all. Man-made calamity, natural calamity. So this is very important for you all. These two episodes, these two calamities are beyond your control. These two calamities are beyond your control. That's when that particular episode which I narrated about a Korean company, when that particular factory was affected, when our superior contacted me, I was boldly in a position. I didn't check any policy. I didn't check my files. I was able to confirm to him that policy is in force. Why did I give a confirmation? Because I was absolutely certain that all the policies are in force, because we were very, very strict in the sense. I was very, very strict as far as insurance is concerned. Not only I entrusted responsibility to a particular officer, occasionally I also used to go and check. I used to go to his particular table. Then I said, can I go through all the insurance policies? I will, then I sit in front of the computer and I go through all the records. So they also know that any moment this man might come and check it. So the instructions given to them were, you have to ensure all the policies are in force. That is your responsibility. At least 7 days prior to the expiry, you should ensure all the policies are in force. Because I know in some other places, people sit on renewals. in one of the banks, when I conducted a session for credit officers, I asked them, from where are you all? They said we are from this particular branch, that particular branch, this particular branch. So I asked them, can you all confirm that all the insurance policies in your branches are in force? None of them wanted to confirm. None of them wanted to confirm. They just looked down, and so I said, so they said, no sir, we'll have to check. When I asked them, they said, no sir, we'll have to check our file. So then I told them, so that it gives me an impression that the insurance policies in your branch, particular branch where you are attached to, are not in force. Because none of them wanted to confirm. When I asked them, they said, we'll have to check. But take your mind back to that episode where this gentleman, when he asked me, I said, boldly I said, insurance is in force. So remember, wherever you are working, whatever responsibility assignments you are given, insurance is a very important area, because we have faced several calamities in this country due to man-made natural calamity. You know, there are certain, you know, even now you could say that the various amount of protests are taking place. If those people go and damage some of the assets which are mortgaged to us, what is the situation of the bank? So it's very important for you all to remember this. This I discussed. All insurance contracts are governed by a principle called utmost good faith. It originates from the Latin term "upere me fide." That means many people who avail various types of insurance covers may not be aware of this legal principle. Normal contracts are not governed by such a requirement. For example, whenever we buy any item or a grocery or any consumer durables, we could inspect such items before we finalize the purchase and decide to buy. In other words, we know what we buy. The concept of utmost good faith applies to all insurance contracts. Only the insurer will know all the facts covering the items to be insured. Hence, they are obliged to disclose all the required information truthfully. Any non-disclosure of material facts will result in the rejection of any claim in case of an eventuality. The proposer and insurer should be extremely honest with each other and make full and accurate representation of all facts which are considered relevant without withholding any material information. So this is a good lesson for you all also, good learning for you all. Whenever you are taking an insurance policy, insurer just gives an application form. So you are supposed to, you are obliged to speak the truth. Whatever you say, insurer will accept it. The problem will crop up only in case of a claim. When the claim crops up only, they will make their own investigation. And if it was found that you have concealed, suppressed certain information, then the insurer is not liable to honor the claim. So remember the principle. Now, utmost good faith. Now, this is the most important. Now, computer key also you have, this is the most important key. Utmost good faith. Utmost good faith is the most important key in insurance. Then, important aspects to be checked on insurance policy. When you are getting the insurance policies, when you get the policy document, the problem is not over. You have to check one by one. You have to check the policy document, because this is a very important area. What are the things you have to check? You have to check whether the insurance should be obtained to cover the full value of the asset and not the facility amount. Very many occasions, very many times, we have come across situations. Some people go and insure the asset covering the facility. If you are granting a facility of 100 million against 200 million worth of assets, you have to insure for what amount? For the full value of the asset and not the facility amount. Then location of the asset, description of the asset, serial number of asset, mortgage should be checked with the policy. Now, when you get the insurance policy, you have to cross-check the policy document with your mortgage, with your documents, and say whether it is the same asset which is covered. Supposing if they have made a typographical error, insurer has made a typographical error in the policy document. Actual property mortgage to you is 98, but when they send the policy document, they have said 92. and you also have not checked it. In case if you have to make a claim, that will result in unnecessary complications. Then insurance policy should be assigned in favor of the bank, as an assignment will prevent the borrower from making any claim direct and effectively protects the interest of the bank. Why we want the policy to be assigned? The reason is if the policy is not assigned, the insurer is not obliged to seek your concurrence. So if I have mortgaged my vehicle to you, I have taken insurance cover, and if supposing my vehicle meets with accident, if I lodge a claim with the insurer, if the policy is assigned in favor of the insurer will not honor the claim to me. He will write to the bank and ask the concurrence, the approval of the bank to honor the claim. So if the policy is not assigned, insurer is not liable. If the policy is not assigned, they don't have to ask permission from you. They can do anything they want. If the customer asks to reduce the cover, they can reduce it. Delete some of the covers, they can do it. Why? Because the policy is not assigned to you. So assignment is very important. When you are getting the policy document, I have seen people, when the policy document is obtained, colorful document, they say, we have got the insurance policy. You had to check the policy document carefully, whether all the covers are included. Then ensure inclusion of all relevant covers. Now, when you get a fire policy, you have to ensure. Now, you can just go to an insurer and just get a fire policy, but that will not give you absolute protection, because when you say fire policy, there are so many other perils, risks which have to be covered. I will explain to you all. So you have to ensure whether all these risks are included in the particular policy document. Then adherence to special warranties. There are certain special warranties. I will explain to you all what is these special warranties. If you are not, now sometimes insurer will give you the insurance policy, and in some areas, in the policy document you may find in red, they would have said this policy is issued subject to special warranties. Then you will have to find out what are the special warranties. I will explain to you all what are the special warranties. So if you have not complied those warranties, insurer is not liable. Insurer is not liable. Then effective machinery should be in place to ensure the policies are renewed on time and are in force at all time. Now, this is the most important thing. When you get the policy document, you will have to see that you had, I don't know, the system, different banks will have different system, but now you all are working in a computer environment. You all are very, very fortunate. Unlike when we started our career, you at the click of a button, everything is there. So you don't have to worry. So you have to ensure that effective machinery is there. Effective. So now if you, for instance, I remember when we were at HNB, or even all the other banks where I was in charge, we introduced a system. Now today we are in July. The staff will be, now at this particular moment, staff will be engaged in renewing the policy which are due to expire in August, not in July, because that was the system I introduced. So the computer, you take a printout from the computer where everything is fed. Computer will tell you, put everything, then we take a printout, they take a printout, and that will give you the policies which are due for renewal, due to expire in August. So August renewal, we start the renewal mechanism in July, not in August. I'm telling you, that's why we had absolute success in our areas of responsibility, because nobody has found fault with us. We are not allowed the banks to incur any losses due to our lethargy, due to our carelessness. So we had effective machinery. So remember, insurance machinery should be there. Expiry date is very important. Policy you have to renew the policy. The policy is due for renewal on the 5th of, say, 10th of July or 9th of July. You can't come and renew the policy on the 10th of July. You can't renew it on 9th. Why? Supposing something has happened on the 8th, insurer may even refuse to renew the policy. I could remember when we were at HNB in the 90s, there was a major flood in Colombo. Half of Colombo went underwater. Half of Colombo went underwater. Then the Met Department made an announcement. They are expecting another major flood within the next 48 hours. So after the first flood, it was, I think, one of the biggest floods, major floods in Colombo, I think, during the 90s. Then Met Department said, weather warning, they're expecting another, similar to yesterday's one, they're expecting another bad weather during the next 48 hours. Wide publicity was given. So what happened? Immediately, we got instructions from our managing director, because he was very strict as far as insurance was concerned. He instructed all the bank branches and the people who are responsible to check all their policy documents and see whether the flood cover is there. So we were also working till late in the night to check all our policy documents. We had to take all our policies and check and see whether all these people have got the flood cover. And we got to prepare a list. I must confess, some people didn't have the flood cover. Then following day, we were making arrangements to coordinate with the insurer to get this cover. What happened? When we contacted the insurers, they said, sorry, we have suspended the issuance of flood cover. All the insurers have taken a decision to suspend the issuance of flood cover. So when I asked the reason why you all are suspended, no, because there was a weather warning because there was a warning, insurer was not prepared to extend the flood cover due to that particular weather warning. So remember, you can't, just because there is your next door neighbor's house is burgled, just because there was some problem, you can't rush to the insurer and ask for a cover. They will not give it. So you have to be prepared to have all these covers intact. Any questions on that? Any questions? How many have logged in now? How many have logged in now?
68.
Right, very good. So now special warranty. What are special warranties? I told you all in insurance policy, there are certain special warranties. They say special, insurer will say in the policy document, special warranty. When you say special warranty, what does that mean? It means that they are issuing this policy subject to certain conditions. Now I can share one or two examples. Scale industries customer, he was having a what you call small workstation somewhere off Maragam, somewhere off Pannipiti or somewhere. So we used to go on inspection every month. We used to go on inspection because this was a SME loan. And in the insurance policy, there was a special warranty clause. So this particular facility was granted on a refinance. It was granted on a refinance. We got from, at that time, NDB, National Development Bank. Before they entered into the commercial arena, National Development Bank, they were the people who were involved in project financing. So we used to get refinance from NDB because all the facilities what we grant, we had to get refinance. Certain amount was given by NDB in the sense they had money from the Asian Development Bank. Then even the credit paper, everything we had to send in. Then, they wanted even the insurance policies copies also, we sent. They periodically, they have been asking us to confirm whether we have complied with the special warranties. So we said we have complied. So they wanted us to get confirmation from the insurer whether we have complied. These are all we have learned. I am sharing with you all. Then when we wrote to the insurer highlighted and said, please confirm that you have fully complied with the special warranties. Insurer, I think it was Sri Lanka Insurance. The insurer has put this in. Please confirm that you have fully complied with the special warranties. What are the special warranties? They have said no smoking board should be displayed at the workstation in all 3 languages. That was a special warranty clause. In English, Sinhalese and Tamil. They have stressed all 3 languages. So then, because NDB was behind us, because they were doing the project finance, they were giving the refinance facility we had to claim from them. Then we carried out, because in our previous inspection, we didn't notice about this board. So we carried out, this happened during the 80s. Again, myself and my colleague, we carried out an inspection. We saw earlier he was not having that board, because we gave a call and informed the customer, have you put the no smoking board? He said, they have not put it. So I said, you had to put it because we had to confirm. I am giving you 1 week's time, please put the board. Then after that, we have been following it up because we had an excellent follow-up system. Then when we asked the customer said, sir, I have put a board, no claim, no smoking board, we have put. So we carried out, because we can't just take the customer's word, because we were asked to carry out an inspection and confirm. Then we went to the site. Board was there. No smoking board was there. But it was only in English and Sinhalese, no Tamil. Only in English and Tamil. We don't know. We were not interested in this thing, but insurer was behind us. So when we asked this customer, why you have not put the board in Tamil? He told us, sir, I have all my employees are Sinhalese. And in this area, I don't think there is any necessity for me to put the no smoking board in Tamil, because that's a rural area somewhere of this thing. So the explanation given by the customer was justified. Then we wrote to the insurer and told the insurer, we confirmed that he has complied with the no warranty clause. However, he has put the no smoking board only in 2 languages. He has not put in Tamil. The reason is because 100% of his workforce are Sinhalese people, and customer feels that there is no necessity for him to this thing. And what he said also was correct. Then the insurer gave us permission to amend the no warranty clause. I'm giving this as an example. No warranty clause, because supposing if that particular what you call that gentleman's factory or small workshop, it went on fire, insurer would have disclaimed liability, because he would have told us, no, you have not confirmed the no warranty stipulation compliance, you all are not confirmed, because we have been asking you all are not confirmed. So therefore, insurer would have declined. So remember, you have to check no warranty, when you get a policy document, examine the policy document very carefully and see whether there are any no warranty clauses. If there are no warranty clauses, you have to find out whether the customer has complied with. I can give another good example. Personal experience. Now, about 4 or 5 months back, there was a heavy blowing here, heavy rain. My TV was not working. So when I contacted the what you call agents, I said I have got a 3-year guarantee. They said, sir, we are very sorry, because there is a electrical extra clause, and your TV would have got affected due to the some electrical complications. So therefore, they are not liable. So they gave the guarantee card. So I was not bothered to go through the what you call this warranty card. When I got the warranty card, I have signed and I have kept it. But when this particular calamity occurred, and when I tried to on my TV was not working. And these people said, this has caused due to an electrical short circuit, and which resulted due to the heavy rain. So therefore, they are not liable. Then what happened? Then I was speaking to them and I was telling them, but you all never told us. They said, no, sir, we have in our policy, in our warranty card, we have stated that. In our warranty card, we have stated. But thankfully, I have insured my house, insured my household appliance, everything is insured. My house is fully insured, even though I don't have any loan now, I have insured it. Then I contacted the insurer. And I wanted to find out because this TV was about 1 lakh. So I contacted the insurer and I asked the insurer, can you please confirm whether the electrical extra clause is included in my policy? So they said, give us 2 hours time, we'll come back. Then they confirmed. They came back and said, yes, sir, your electrical extra clause is there. TV is covered for 1 lakh. So I said, if I make a claim, he said, yes, you can make a claim. You can make a claim, we are liable to pay because you have included the electrical extra clause. But I didn't claim it. The reason was I kept on pressurizing this agent. I kept on pressurizing the agent, and then I spoke to their manager and I told them, I had just bought the TV, not even 3 months, and now I am told this thing. Then they said, no, sir, we'll try to do something. Then they came back and said, as a special case, they have decided to repair it free of charge. They have decided to repair it free of charge. What was the cost? About some board or something has gone. So they came home. And I was there was no necessity for me to take the TV. They came home and repaired it, replaced it. So this is I'm just sharing this to give you a strong message. That when you say insurance, there are so many variety of clauses there. So remember, because when you are a credit officer, when you are a branch manager, insurance is one area. When I was working as head of the division, insurance was one area which came directly under my purview. Even though there was a officer who was directly involved in that, but that officer, in addition to that, I was also checking because we can't take a chance. Is it clear? Any questions? Any questions? Any questions? Can I move to the next one? Can I move?
Yes, sir.
Right. So now, war exclusion clause. What is war exclusion clause? A war exclusion clause is in an insurance policy specifically exclude coverage for acts of war such as invasions, insurrections, revolution, military coup, and terrorism. A war exclusion clause in an insurance contract refers to the protection of an insurer who will not be obliged to pay for losses caused by war-related events. Insurance companies generally exclude coverage perils on which they cannot afford to pay. Now here also I am going to give you a very good example because I am, when I talk about certain things, my memory bank is thankfully still intact. So I am going to share another good experience which I encountered. When I was in Pan Asia Bank, I was the head of credit administration. In fact, I am the person who started the quiz competition in Pan Asia. Now HNB also, I was involved in quiz competition. So thereafter, wherever I went, I wanted to start this quiz competition. So I am proud to say I am the person who started the quiz competition at Pan Asia Bank, and I am very happy. Pan Asia Bank is every year they are having this quiz competition, which we started. I am proud to say I am the person who started it. So when we had the quiz competition, we had the first quiz competition. We had an organizing committee. We had the first competition in a 5-star hotel in Colombo. I don't want to name the hotel. It's one of the 5-star hotel because we went and went to so many places, and ultimately we selected one 5-star hotel, and we had the quiz competition in that particular hotel. Entire bank and the entire branch people participated team, and it was very colorful. A lot of people participated. Then the day of the quiz competition, this was during the war. The day of the quiz competition, since I was the major organizer, the competition was supposed to start at 4 o'clock. But I was at the hotel at 1 o'clock because I always take it seriously. Whatever this thing, I take it seriously. Because if something goes wrong, is bad for us. People will find fault with us. So I want to see whether everything is intact or all systems are in place. At 1 o'clock, I went to the hotel. The day of the quiz competition. The day of the quiz competition. I went to the hotel. Hotel was virtually empty. Hotel was virtually empty. 1 o'clock, no one was there. Then the hotel manager, and then they are known to us because we have been talking to them when we made this arrangement. So when I went there, I want to park the vehicle because the choice was mine because hotel car park was empty. So the choice was mine. I could select any place I want. Then I asked the people there. Then they said, "Sir, you can park it here." That was the best location facing the reception. I don't want to mention the name of the hotel. So they said, "Sir, you can park it here." So I said, "Okay, yes, they can," because I told you just facing this is. I also thought my car will be safe. And I parked my car because at that time no one was there in the hotel. And they had some weddings also. Then 4 o'clock we started the quiz competition. By 4:30 the car park was full. We had the quiz competition. We finished the quiz competition by, I think, 7 o'clock or so. Then we were having the cocktails. It was, we were very happy, and all of us were having a, gala time after as the program concluded successfully. So all were telling very good, and also we were there. I was also there. Then I saw, while we were having our snacks, one person, one of the hotel waiters, with a bell in his hand, small bell in his hand, because they had about 4 or 5 weddings also on that day. He was ringing the bell and going right round the guests. He must have gone to the wedding also, all the weddings, this thing. Then he stepped into, he was going with a bell, he was going all over. So I was also wondering, what is this man going with a bell? And there was a board. He has put a board on the board was hanging, very visible. So I was not bothered to look at the board. So he was going, I was telling others, what is this man doing with his board? He was ringing all over and going. Then again, when he came back, I was a bit inquisitive to find out. But in the board, they have made a display. They have written vehicle number. They have put the vehicle number. Vehicle number. That was only. Vehicle number, only that. Vehicle number. You're ringing the bell and going vehicle number. Then I just had a look at the number to see my vehicle. To see it was my vehicle. I was shocked. Immediately I went and told that person, what's the problem? He said, "Sir, this vehicle is yours?" I said, "Yes, you are wanted there. You are wanted there." Then immediately I rushed to the reception and spoke to the manager. Then, what he told me? He said, "Sir, I'm very sorry. You have to remove your vehicle immediately." I asked, why? Why should I remove the vehicle? He said, "No, because a top minister is coming as guest for the wedding." One of the top ministers, I know the name of the minister, I don't want to mention. He is scheduled to attend the wedding, so we have got instructions to reserve a place for him closer to the best place. So this army and police, they have come and they have selected your spot where you have parked the car. They have selected, and he said, "Sir, fortunately you have come. Otherwise, they were about to break your car." They said, break the shutters and all." Immediately, I rushed to see my vehicle was surrounded by army and police people. Then they shouted at me and said, "Whose car is this? Please remove it immediately. Please remove it immediately." And there was no alternate place for me to park also. Hotel people also were not interested because the car park was full. They said, you remove the car immediately. Remove the car immediately. Then I immediately removed the car and went home. I couldn't participate in the cocktail because I was really disappointed. I went home. Following day, I gave a call to the particular hotel manager and I told him. Then I told him, it's very bad for you all to do this because we have spent millions and we have spent millions on this, and now you are happily telling me to take the car. Then he said, sir, I am also very sorry because it's beyond our control. It's beyond our control. So I said, at least you should have provided an alternate place for us. So the following year, when we had the quiz competition, we have backlisted the hotel, that particular hotel. We selected some other hotel. So what I'm trying to say is, I was told by the insurer, in case if they have caused any damages to my vehicle, insurer was not liable to another claim. Why? Because any damage caused to the assets during war by the armed forces are not covered by the insurance. There's a special warranty clause. I also didn't know about it when I narrated this story to some of my insurance friends. They only told me because armed forces are engaged in maintaining peace. So therefore, if they go and damage during the wartime, if they go and damage something, insurer is not liable to honor a claim. Just see, I'm just sharing this. I told Panisha top people also, see the flight. I went at 1 o'clock. Parked the vehicle, selected the best place, and ultimately I had to suffer. So, what is war exclusion cover? A war exclusion cover in an insurance policy specifically exclude coverage for acts of war such as invasion, insurrections, revolution, military coup, terrorism. A war exclusion clause in an insurance contract refers to the protection of an insurer who will not be obliged to pay for losses caused by related events. Insurance companies generally exclude coverage perils on which they cannot afford to pay. So there is a clause there, it seems. There is a clause. So in case if the police come and damage your vehicle, if the army come, if any forces or whatever, whoever who comes and damages your vehicle, insurer may disclaim liability. Any questions on that? Any questions? Right. So now, building insurance and land value. When you are taking the insurance policy, very many times we have come across situation if the land value is adequate, some people, they say insurance covering the building is not necessary. But we still insist, even though the land value is adequate for you to cover your facility, if there's a building, still we want to get the insurance covering the building. What is the reason? Take for instance, there's a small block of land, 10 purchased land. On this land, they have put a commercial complex, a building, a 3-story, just say a 3-story building. Somebody has put a 3-story building on a plot of land, 10 million worth of land. They have put a 3-story building. But this particular land is, very valuable land now. I saw somewhere, Majestic City, next to Majestic City, there's a lane, road. The perch is 25 million. The perch is 25 million. Next to Majestic City, that area, the perch is 25 million. So similarly, here also, the land value is very high, but they have put a building. So let us assume the land value, 10 purchase, let us assume the land value is, say for instance, we put 10 million, the land value is 100 million, but they have put a building. In case something happens to the building, the bank need not worry. We can take comfort under the land value. So therefore, the tendency is there. I have come across situations like that which is not good, which is not advisable. So I always discourage people in some other banks. I have come across, if the land value is covered enough, they exclude the building insurance only, not necessary. But you have to insist on the building insurance. What is the reason? The reason is, supposing if there is a fire, supposing if there is a destruction and if the building is damaged, you as a banker, are you going to Are you going to sell the land and recover your loan? Tell me. Now, supposing the customer, if this customer's building is damaged, he rushes to the bank and says, "Sir, my building is damaged." You have not taken the insurance because you have taken comfort under the value of the land. Are you going to sell the land and recover the facility? Can you tell me? What is your opinion? Are you going to sell the land and recover the facility? Today you all are very silent. Are you all going to take the, you don't have to worry, you can give your opinion, which will be respected, because as I told you all are young people. What is your opinion? If you are not taking the building insurance, because
in addition to the land, there may be at least a small value for that burned building. So we can't.
Small value for the small value for the burnt building, but still for all, if he has not taken the building insurance, he had to pay out of his money. No? Am I correct?
So if the land value is sufficient, still we can proceed with the legal action or whatever, selling the property.
Yeah,
we can recover.
right. Yes, that's good. You are correct. If the land value is sufficient, we can proceed with the legal action or karate action. We can. But as a banker, what is our priority? As a banker, what is our priority?
Because the borrower also try to continue the business after making some other alternative. So we should allow.
Yes, actually.
So if the building is fully secured, sir, without going for legal action, we can easily recover our debts.
That's right.
It is comfort.
That's right. That's a comfort. Because as a banker, we also have a national responsibility to ensure the customer gets back to his business as quickly as possible. As quickly as possible. We are not going to tell the customer, we are very sorry about it, so please make arrangements to sell the land and settle our loan. Are we going to tell that? Yes or no? No. What do you say? You want that particular customer to get back to their business as quickly as possible. Now take for instance the Cool Planet building, which was damaged due to a fire at Bathramulla. I showed you the image. Now I am sure, 100% sure, they would have insured it. I have not gone toward that area. I don't know the present situation. So supposing if they have not taken the insurance cover, see the difficulty you have, because even though you have to sell the land, let us assume, okay, you want to sell the land. Even to sell the land, you have to demolish all those debris. Then the customer will go bankrupt, because this is due to a situation which has cropped up due to mob violence or due to some electrical shortage or something which was beyond his control. So as a banker, our responsibility is to ensure that our customer gets back to his business as quickly as possible. That is the reason why we want, even though the land value is adequate, we want the customer to get back to his business as quickly as possible. Take for instance another good example. You have taken a housing loan from your bank. Your land value is, let us assume you have put up a nice house. Your land value is 10 million. You have put up the house which has cost you 3 million. So when the bank tells you, when the bank told you to insure the building, you are coming and pleading with, I have come across such situations. You have come and told the bank people, no, can't you please exclude the building insurance, because my land value is more than enough. If something happens to my building, you can sell my land and recover. You will say, you can sell my land and recover the loan. So supposing if you have, if you have gone by the customers, by the staff members' request and waived off the building insurance, in case if the building is damaged, due to a mob violence, due to a fire, due to electrical short circuit or something, your building has gone, your house has gone. Now you have with your family, you are vacated, you are staying with a neighbor or friend or in a hotel. Monday morning, early morning, you are rushing to the bank and you are telling the bank, sir, there was a major problem. My house is damaged. There was, some people went and, there were some mobs who came and, raided our house, or there was a fire at the next door. There was something, it has gone. So then you are, where are you staying? I am staying with my mother or with my father or with my sister. Then will the bank manager tell you, okay, then we'll have to make arrangements to sell the house, land. Will that happen? Is it a good thing or a bad thing? Is it a good thing or a bad thing? Bad thing. Bad thing. So how will you feel? Because I am telling you this, I have come across such situation when we give staff loans. People, when we insist on the insurance, some of the people, they don't understand. They come and so they speak to our staff and tell the staff. Then when they get the policy letter, they building to be insured, so they don't want to pay additional premium. So substantial premium. So they speak to my staff. Staff say, go and speak to boss. So they come and speak to us, speak to me. Then I used to ask them to sit and give them a lecture about insurance. They said, boss, my land value is more than enough. No, boss, why do you want to cover on the building? Can't you waive it off? This is the reason. This is the reason. So if you have insured the building, when you went and informed the bank that there is a fire, bank will tell you, don't worry, your building is fully covered. So until the claim is processed, bank will give you a temporary facility also. Bank will say, okay, you can start building the house. We will give you a temporary facility. We will give you a temporary overdraft. We will give you a temporary loan till the insurer settles the claim. We will give you money. Tomorrow itself you can start working. Not only that, the policy covers another clause that they will even pay rent in case you have to relocate. If you are relocated due to the fire and you have to go and stay somewhere, the insurer, in one of the policies I saw, that clause also was there. Insurer says they will pay the rent also, this amount of rent, that also given. You will pay this amount of rent till the building is reconstructed. So this is the reason why, because very many times I have seen, I have seen in the proposal, in some of the banks, not HNB. No, HNB, they were insisting on the building insurance. So we were also at that time, like we were also young bankers. We used to, at training program, we used to ask our superiors, what is the necessity to get a building insurance? This is the answer given. So in some of the banks where I was attached to, after that, I have come across in the credit proposal, they say, building insurance waived off since land value is adequate. I protest. I have protested. I used to send them this mail and say, no, this thing I don't agree with. I don't agree. They said, then sometimes people would have thought this man is talking nonsense, he doesn't understand. So little bit of knowledge is also dangerous. People say little bit of knowledge is also dangerous. So that is the reason, even though you may come across situations like that, because then you have to ask, in case of a destruction, in case of a calamity, are we going to sell the land and recover the property? No. Our responsibility is to ensure the customer gets back to business as quickly as possible. Is it clear to you all? Is it clear? Is it clear?
Yes, sir.
Yes, sir.
Any questions? Right. Accepting the building insurance in consideration of the value of the land is not prudent, since the bank should not only ensure the safety of its exposure, it has an obligation to ensure the borrower is in a position to restore to the original status which prevailed prior to the calamity. Actually, I must also tell you all, the entire PowerPoint presentation what you are seeing were prepared by me. Every word in this PowerPoint presentation was typed by me. Because I can do any PowerPoint presentation. I can even at this page. That is all based on my experience. Even this morning, I put some more, some more additional this thing into my PowerPoint presentation, because whenever I think of something, I immediately come and put that here. That's why I have said copyrights reserved, because everything is, this is what you are seeing in these presentations are all my personal experience, are my personal experience. Whatever you see are all my personal experience. Even this morning, I put some of this thing because I wanted to share my experience with you all. It's a pleasure for us to share our experience with you all. So accepting the building insurance in consideration of the value of the land is not prudent, since the bank should not only ensure the safety of its exposure, it has an obligation to ensure the borrower is in a position to restore to the original status which prevailed prior to the calamity. Because we are not interested in selling we are taking securities that is to face an eventuality, but at the same time, we as bankers, we have a national obligation to ensure our customer gets back to the business as quickly as possible. Now, building insurance and land value, the risk involved, I have explained to you all. Fire insurance, I have explained. On every asset on which the bank has an interest or charge should be adequately insured accordingly. Fire insurance cover is an absolute necessity, and this should not be waived off under any circumstances. This risk is beyond the control of us, since we cannot predict an impending calamity. So when you say fire insurance, if you just take a fire insurance, that will not give you adequate cover. When you say fire insurance also, there are a lot of clauses. So when you get a policy document, if it says fire insurance, don't think that all the risks are covered. You have to examine the fire insurance and see whether all these risks are covered. What are the covers? When you say fire, you have to say riot, civil commotion cover is there. What do you mean by riot and civil commotion? Supposing if that particular building is damaged due to a mob violence, and if the riot civil commotion clause was not there, insurer is not liable. Remember, insurer is not liable. Sometimes when you get a fire policy, you'll be happy, you will take comfort. Fire policy, we have got the fire policy. Boss, we have got the fire. Examine the policy and see whether these covers are there. What are the covers? Riots and civil commotion. If the building is damaged due to riots, mob violence, if you don't have the riots, civil commotion, you will not get the cover. So you have to get malicious damage. What do you mean by malicious damage? Any damage caused to the building by 3 or more people. That is what is called malicious damage. That 5 or 6 people come and they just damage your house when you are out. So if you are not taking the malicious damage clause, insurer may disclaim liability. Explosion. What do you mean by explosion? If there was a bomb explosion, not a terrorist bomb, somebody throwing a bomb. If there was an explosion, all of a sudden somebody has thrown a bomb or some sort of explosion, there are so many types of explosion. So if you are not got the explosion cover, insurer is not liable. Floods, cyclone, national peril. Now actually this particular slide this morning only I put it. Because it came to my mind. So when you say floods, if you are not taking the flood cover, insurer is not liable to pay the claim, because they will say your policy doesn't cover flood cover. Then cyclone, natural peril. If they are due to a cyclone or say due to tsunami or something, if your building is damaged, insurer will not honor any claim. Then terrorism cover. If the building was damaged due to terrorism cover, the insurer is not liable to honor. Now I can give you a good example, go back to history. I think I'd like to share this with you all. During the height of the war, during President Premadasa's time, when President Premadasa was there was a JVP crisis, there was a LTT crisis, and there were lot of problems in the country. And because of that, insurers decided they will not give terrorism cover. All the insurers decided terrorism. If you ask for a terrorism cover, insurer says no, we won't give terrorism cover. Why? Because there were a lot of problems in the country, JVP crisis, that crisis, this crisis. So therefore, insurer, because their daily properties were being damaged, explosion and various things. So therefore, insurers also decided, no, we will not give terrorism cover. Insurer said terrorism cover is excluded. When you ask for a policy document, they will clearly say terrorism cover is excluded. Then the banks and business people, they were having a lot of problems. And they were telling that, we can't do business because the terrorism cover is not there. Insurers are not giving terrorism cover. So how can you do business? Then the representations were made to the then President Premadasa. Yeah, and he was a practical man. He immediately summoned all these people, insurers, treasury officials, everyone he summoned, and he had a meeting. Then what was the decision taken? President gave instructions to all the insurers from today onwards, you have to include terrorism cover. You have to include terrorism cover. But the premium what you collect on the terrorism cover should be remitted to the treasury. See the practical approach. He said, whether a policyholder likes or not, you make terrorism cover compulsory. The order came from the president. I could very well remember. He said, whether even if you want to get a policy without terrorism cover, because terrorism cover premium is very high, you can't. You have no option. You have to. They renew the policy with the terrorism cover. Then the premium, but they collect from the terrorism cover was they had to remit to the treasury because the terrorism cover fund was maintained by the treasury. Even now they are maintaining that. So in case of a claim, you can lodge a claim with the insurer. Insurer will, after all the preliminary investigation, insurer will refer that to the treasury. Then they will honor the claim from the terrorism fund. So see how the practical approach they have taken to solve that problem. So whether you want to get a policy without terrorism or not, insurer is a no, it's terrorism cover is compulsory. Now what is the situation? After 2009, after the conclusion of the war, the terrorism cover compulsory cover has been removed. Now the terrorism cover is not compulsory. Only you have to ask for it. Otherwise, the insurer won't give. And insurer is also not interested in getting the terrorism cover because the reason is the premium doesn't come to them. The premium goes to the treasury. So therefore, insurer also is not interested in getting the terrorism cover. Now, recently when I insured my vehicle, when I bought my new car, I want to get a cover. Insurer, I went to the insurance company and then I said I got the invoice, everything. And I said, I want a temporary cover because the agent has to go to Hambantota to bring the vehicle. So I said, give me a temporary cover. So he everything prepared. Then the terrorism cover was not there. Then I asked why terrorism cover is not there. So terrorism cover is not necessary now. I asked why. No, he said terrorism cover is not necessary, sir, because I have not put terrorism. Because why, sir? If you want terrorism cover, you have to pay an additional 3,900 rupees. I said, never mind. I will pay that. You include terrorism cover. You include terrorism cover. Then he said, but in vain. I said, no, never mind, because I am going and lecturing people to include. So I want terrorism cover because I must have peace of mind. So he gave the terrorism cover. This happened in 2018. So what happened? After the Easter Sunday bomb explosion, people in Colombo, I think they would have heard about the commotion. After the Easter Sunday bomb explosion, there was a lot of tension in the country, especially in Colombo. While we are working, we are getting messages to say there's lorries going around Colombo with bombs. So what happened? Most of the people in the bank, they were contacting the insurer to find out whether there is a terrorism cover for their vehicles. Because most of the people have taken cover without terrorism cover. Because at that time, I was not in charge of credit administration. I was head of training and development. So to see these people have taken the cover without terrorism cover. So after this threat came only because messages are coming, there's a lorry going around the country, and all rumors also. Then everybody, because government also took a lot of preventive measures. So after the Easter Sunday attack, only people realized. Then they were rushing to the insurer to get the terrorism cover. But I was happily seated. I told them, no, my policy, I have the terrorism cover. So these people were rushing to the insurer to get the terrorism cover. They came and asked my advice also. I said, you speak to them over the phone and they will ask them to send a temporary cover note confirming the terrorism cover. So fortunately, cover was given because the premium was remitted to the treasury. So terrorism cover, I know people are now renewing policies without terrorism cover because that will not give you peace of mind. As a customer, when a customer comes, please insist on the terrorism cover, and you can tell them the Easter Sunday bomb explosion. And anything could happen without our knowledge. So if there's an explosion, and if the insurer will say, this explosion has caused due to act of terrorism. If the terrorism clause is not there, insurer will not honor the claim, even the treasury will not pay settle the claim. Any questions on that? Any questions? Right. Electrical extra, I have explained to you all. Electrical extra, any damage caused to your property or your property or your consumer durables or whatever due to electrical short circuit, insurer will not honor the claim. Aircraft impact, especially this cover is applicable only if you have mortgage, if you are taking any security of any customer who is residing in close proximity to the aircraft. Sorry, for proximity to the airport. Proximity to the airport. Now, if you go towards Katunayaka side, you could see the planes flying. So sometime back, somewhere in Indonesia, somewhere a plane went through an apartment complex. The plane went through an apartment complex. So if the aircraft impact cover is not there, insurer is not liable. So whenever we were taking any policies, if we are granted any facilities to any customer who was, who are having stocks or properties at closer to Katunayaka, we insist on the aircraft impact. We insist on the aircraft impact because the plane could crash. So these are some of the covers, because these covers only this morning I put it, because this came to my mind this morning when I was listening to the news yesterday about the floods and all. Only this morning only I immediately put this particular, all these clauses. Any questions on that? Any questions? Any questions? Can I move to the next slide? Yes or no?
Yes.
Right. Then burglary insurance, I have already explained burglary insurance. Burglary insurance, although is essential under exceptional circumstances, if we are satisfied adequate precaution has been taken by the borrower to prevent any such burglary, we could exempt such cover. The undernoted criteria will guide in arriving at a decision towards waiving of such cover. I explained to you all, it's already in my presentation. You can see if adequate 24 round the clock security cover is satisfactorily provided and the possibility of theft or burglary is remote, then you can waive off. The asset under reference are heavy and cannot be removed overnight. Now, if you come across a heavy machinery, is it necessary to get a burglary cover? If you are taking a immovable machinery, is it necessary to take the burglary cover? Yes or no? If you take machinery as security, is it necessary to take a burglary cover?
Yes.
No, sir.
No, because the machinery cannot be removed. Then
Yes.
burglary on first loss, I have explained. Yes. Then this I have earlier slide. Now this particular, I am coming to the conclusion. Look at this particular slide. You will not have this in your handouts. Look at, I'm going to read it. You better read it. Read it with me. Read it with me. Sri Lanka Natural Disaster Reinsurance expired just before the floods. The National Insurance Trust Fund, NITF of Sri Lanka, failed to signed the reinsurance arrangement covering their policy, which was due for renewal 2 months prior to the floods and landslides in the country in 2017. In 2017, there was a major flood, and there were landslides in some of the upcountry areas. And there was the government has taken the National Insurance Trust Fund of Sri Lanka has taken a policy with the reinsurers, but they have not renewed the policy. They are not renewed the policy before its expiry. What did they do? According to, now see, 2 months prior to the floods and landslide, the policy covering their policy, which was due for policy, expired 2 months prior to this calamity. Policy expired. So what happened? According to the Disaster Management Center, the floods in 2017 in Sri Lanka damaged 2,788 homes, with a further 18,413 houses being partially damaged. The adverse weather conditions impacted 14 districts across the country, and a total of 683,831 people, of which 213 were killed and 147 injured. Look at this very carefully. Under the National Disaster and Emergency Relief Insurance Scheme introduced into April 2016, the Sri Lanka government announced compensation of up to 2.5 million for a fully damaged or partially damaged house. Billions of rupees have to be paid as compensation. However, failure to sign the reinsurance agreement and renewal of the insurance policy, which expired in 2017, means the NITF will have to utilize its own funds to pay the compensation. We have enough money, there will be a dip in our profit, but it will not affect the profitability. That means, in other words, the policy which was due for renewal, they are not renewed it. They have been sitting on it. They are not renewed it. As a result of that, before they could renew, this calamity has occurred. So now they have to pay out of their own funds. So if a bank has encountered such a situation, due to the carelessness of the bankers in renewing the policy, the consequences will be disastrous. When you say disaster, not only bank will lose billions, the staff members who are instrumental also will be sacked. That much I can tell you. They will be interdicted. But here, no action was, in this case, I don't think any action was taken. But if it has happened, banks will not sit on it. They will find out why these policies were not renewed. Who are the people who were instrumental? That's the reason, but I showed you the episode where that particular customer, where billions were spent, billions were, they have incurred damage more than 1 billion. Supposing the policy was not renewed, it came directly under my purview, I am sure I would have lost my job. Fortunately, we have renewed it. So if a bank has encountered such a situation, due to the carelessness of the bankers in renewing the policy, the consequences will be disastrous. This is a good lesson for all bankers to ensure utmost priority is given to the aspect of insurance covering all assets on which we have an interest. Then, important records towards effective control and management of securities. Management and operation of securities documentation is an important aspect. All security documents obtained should be held under the dual control of the bank management. Security lodgement register which takes control of the document should be maintained under dual control. Temporary out register, or these are some of the registers you are maintaining, banks are maintaining. Then now we are coming to the end of the session, this particular session. Serious consequences faced by the banks due to lapses in security documentation, management and operation of all the areas which I have shared with you all. If there were any carelessness on your part, if there were any carelessness on the part of the bankers, the next result will be the bank will be unable to realize the advance in case of an eventuality, unforeseen circumstances, protracted legal action, interest income being deprived, loss of profitability, additional expenditure to the bank on the facility being transferred to NPA, legal action, prospect of losing the legal action, which could result in the advance being written off. There's no guarantee just because you file legal action, you are going to, you are able to recover the liability, because you may even fail in the legal action. That's why we always advise legal action is the last option, not the first option. Legal action is the last option, not the first option. Then it could even result in the staff welfare being curtailed. Then let us execute our responsibility with professionalism. Effective management and legally enforceable securities will give absolute comfort to the banker to meet any eventuality towards safeguarding the interests of the bank. Now, any questions on what we have before we, any questions? Any questions?
So insurance on buildings and other things that mortgage to the bank is taken to cover the bank credit risk, right?
Yes.
So this is actually this is decided by the bank to have insurance over properties.
Yes.
And if we fails to renew the insurance on time,
yes,
is there a possibility of taking action against the bank by the borrowers, because there is no such agreement with the borrower and the bank that we do the renewal, and there is no agreement between the customer and the bank. So if we fail to renew the insurance policy on time, and if there is if something happens to the asset, is there a possibility of taking action against the bank?
Yes, very good question. Very good question. Now, when we are taking the insurance policy, one of the condition is we have to assign the policy. The policy should be assigned in our favor. Policy should be assigned in our favor. Now, when you assign the, when you are taking insurance according to our what you call stipulations, even HNB and all, there are stipulations. MDs, managing directors, stipulation, special letter, they call it special letter. There he has clearly said all insurance policies should be renewed on the due date. And if supposing the customer doesn't have money in the account, you have my authority to debit his account and renew the policy. And if it is a savings account, you can debit suspense account interest, because savings account you can't debit, suspense account debtors, and renew the policy, and thereafter you can follow up and get the insurance premium. But your question, whether if the customer has not taken an interest to renew, whether the bank has a right to renew, no? That's the question you're asking. That's the question, no? You're asking?
My question is, if you fail to renew it, what is the right that customer has to take action against the bank?
Right. Very good. If we fail to renew, and if the policy was assigned in our favor, we have an insurable right to renew the policy. So customer can take us to courts. Customer can take us to courts because he could say, I have entrusted the renewal to the bank because the policy is assigned in favor of the bank. The policy is assigned in favor of the bank. If the policy is assigned in favor of the bank has a insurable and legal interest to renew the policy which they have failed. So therefore, he can take us to courts, because that's what the first episode which I have narrated. Our loss was 1 billion. No, supposing if we are not renewed, our policy that loss would have been 1 billion. In addition to that, the insurer also could have taken the bank to courts, because he would have claimed a further sum of 1 billion, because he would have said, I have entrusted the renewal to the bank because the policy is assigned in their favor. So they have an insurable right. If the policy was not assigned in your favor, then you have no right to renew. Still, you have to renew it. You have no right to renew it. You have no right to, but if it is not, as far as we are concerned, all policies should be assigned and renewed. So even if the customer doesn't make any arrangements to renew, we renew it. But in case if we have not renewed due to the lethargy of the customer, then what happen? What will happen? Customer can take us to court because he can say that there are lawyers will come and argue. You have an insurable right. You have an insurable right. When you have an insurable right, you should have taken action to renew it. So when you have an insurable right, that is a legal right you have to renew it, which you have failed. Am I correct? Is it clear?
The insurance is obtained to cover our credit risk, but the primary obligation is with the property owner to renew it.
Right.
This is
Right. Credit risk could arise due to non-payment. It could arise due to a variety of reasons. When you say credit risk, not only the failure on the part of the customer to honor the commitment, it could also result in our inability to realize our exposure in case of eventuality which could occur due to natural or man-made calamity. Here only the insurance comes to the scene. Is it clear? Is it clear?
yes.
When you say credit risk, it's a very good question. When you say credit risk, the credit risk also covers this. It's not only paying the repaying. It's not only repaying. When you say credit risk, it is not only repaying. In case of an eventuality which could arise due to a calamity which could occur due to natural or man-made calamity, then we have to follow on insurers. Now see, when we issue letter of offer, you must see the conditions. The property, the building should be fully insured against all risks. Now I could remember when we were at HNB, when the letter of offer comes, the approval memo comes, they say all the conditions are stated there. The assets which are covered should be adequately insured against all risks. They give the details, everything. So that is the responsibility of the people in the credit administration division to ensure these are all compliant. So when you say credit risk, this is all the part of the credit risk. So we can't just say that in case something happens, we have to follow on the insurer. Now there are so many cases. I quoted another good case. I don't know whether I was able to explain it in detail because it was just before we closed the session. There was a customer, politically connected customer. His loan went to NPA and he has not renewed the building insurance. He was staying somewhere in Colombo 7. And when the policy was due for renewal, my staff, they have contacted him and spoken to him. Your building insurance, these are true stories. Building insurance is due for renewal. He has blasted my staff and he has argued with them and said, insurance, don't renew it. I am not, because it was OD facility, NPA. Don't renew it. I am not going to pay anything. I am staying in Colombo 7. In my staff, people came and told me, it was, he says, he's shouting, he said not to renew it. Then I contacted this particular customer, very difficult customer. Then when I explained to him, he shouted at me also. He shouted at me and said, are you mad? What is this, man? I am staying in Colombo 7 and you want to renew the policy. I don't want this insurance cover because, nothing will happen to my building and I will have to pay additional. If you renew, I am not going to pay it. He said, these are the words, very words he told. I could very well remember. I am not going to renew it. I am not going to pay it. Don't renew it. But I renew it. Because why? Because we have got instruction to renew it. We can't just sit. I told my staff, debit the NPA account and renew it. Debit the NPA account and we renew it. What happened? After the JOC bomb explosion, Ladies College was also damaged. That particular area, what do you call it? I don't want to give the more details. That particular area, a lot of houses were damaged. So we had no information to see. Following day, this man, I could still remember, National, he always comes in National, he was rushing to our bank in search of me. So he said, he was very nice and he said, sir, have you renewed my policy? Then I said, yes, what's the problem? He said, my house also gone. I said, your house also gone? Yes. Yeah, what happened? Then he said, no, my house also gone. He said, then I said, when I spoke to you, you were arguing with me. Now you saw, no? Yes, but I never thought. But you are renewed, no? I said, yes, you are renewed it. renew it, and so that is a good thing. So what happened? We got the claim and settled the liability. We didn't give the money to the customer because we got instructions from our management, process the claim, get the money and settle the liability. Because why? He was a difficult customer. So that was a blessing for the bank also, because here we were contemplating of taking action against this particular customer. And in the meantime, this has occurred, and he was a difficult customer. We couldn't even go and speak to him. When you go also, gates are closed and so when you give calls also, you won't answer when you speak. So people are scared to talk to him. So we recovered the loan in full. We recovered the loan in full. So is it clear? Good question you asked. Is it clear? Is it clear?
So it's clear, but
Yeah.
now, for instance, now say, for example, now customer is having a loan,
Yes.
right, against the property, and finally he default payment.
Yes.
So if the security cover, the land value is sufficient to cover the exposure, can the
Yeah.
bank take a decision to stop insuring the building? So if we stop insuring the building, if something happens, still there is a liability of, I mean, the customer can take action against the bank. How it happens? I mean, there is no such agreement between the customer and the bank.
Yes.
So what is the legal right that customer has, I mean, to take action against the banks? That is my question, sir. Now, if customer default payment, still bank has to continue paying insurance.
Yes, we have to take the insurance because the reason is that property, we have a major interest on that particular property. Even though he is the owner, by virtue of the mortgage, we have also a major interest in that property. By virtue of the mortgage, because we have to ensure that the value of the asset remains intact until it is paid. So supposing if we are not renewed, if you are taking comfort under the land value and decided not to renew the policy, supposing the building has been damaged, the value of asset, the particular value of the asset on which we have an interest will also come down. So we may not be in a position to realize our full exposure in case of a calamity. If the building is damaged, then you have to clear the debris. Like I showed you that pool panel, this thing to clear the debris. All those things will cost the bank, which will be additional burden on the bank. So as far as we are concerned, we have to customer, if you have assigned the policy, we have a right to renew the policy. The customer cannot take us to courts because we have the policy assigned in our favor. In addition to that, we have taken a mortgage under by virtue of the mortgage. We also have a major interest in the particular property and the building. Is it clear?
Yes, sir.
If it is not clear, ask me. I can explain to you further. Are you convinced?
That's clear, sir.
Yeah, very good. But I can give you another parallel example. Supposing if you have taken a mortgage over stocks, a customer you are taking a movable asset, a mortgage over stocks, and then he is in NPA. When the renewal is due, will you renew the policy or not? Even though you have an insurable right, will you renew it? I am asking. I am throwing this question to all others also. Now I have explained immovable building. Now coming to the movable stocks. We had granted loan of 5 million to a particular customer who had 10 million worth of stocks. We have granted loan. And now the renewal insurance is due for renewal. You have to pay about 25,000 to renew the policy. Let us take for example, you have to pay 25,000. Now renewal is due. Customer is not paying. No point. He will say, no, I am not paying because he is in the overdue, he is the NPA. Will you renew it? Will you all renew it? I am asking you. What action will you all take? Will you renew? Because you have insurable right. Will you renew it? It's a question for you all to think. Will you renew it?
We have to renew it. Yes, sir.
Yeah, we have to renew it. Any other Yes, you had to renew it. My question is, will you renew it? Yes, stocks are there. You are taking a mortgage over stocks. Insurance is there. You have an insurable right. If you renew the policy, 25,000 you have to pay premium. When you inform the customer says, don't debit my account, don't renew it. But you have to renew it. Will you renew it? My question is, will you renew it?
Yes.
Yes.
If the security cover is only the mortgage over stocks, we have to keep on renewing. Otherwise, if it damages the,
yes,
we can't recover.
Yes, you will renew it. But because you are totally dependent on the stocks, because you have no other security. But a prudent banker, what he will do is he won't renew it. He won't renew it unless can you complete the sentence? You will not renew
We have
it.
to do the inspection.
Now, if I were, very good, excellent answer. You will not renew it until you are convinced he has 10 million worth of stocks. We have to carry out inspection. Now, he's an ODU customer. We don't know whether he has stocks. No point in renewing the insurance. Just because we are renewing insurance, is not going to pay the claim.
The thing is, generally, the defaulter is never allowed to visit and see the.
Let's say, generally, defaulters never allow, but in the letter offer, we have put a clause. That he should allow the bank officials to inspect the property without any notice. Bank officials, he has agreed for that. As you are correct, we have also faced. I have faced similar situation. If it's a class, of course, I would narrate a lot of stories. But we have faced, because they won't allow us. So what we have to do is, we have to tell the customer, no, we have come here, we want to find out whether you have the stocks to renew it. So, they will, you may get some bad customers, but at the same time, some customers are good. So, we have a legal right to inspect the property. So, we can't just, especially bad customers, don't, because whenever we come across such cases, we immediately write to our superiors and ask for permission, seek their advice, whether to renew. So the reply they give is, please carry out an inspection. Like this participant very correctly said, we have to carry out an inspection. Don't just keep on renewing the policy if it's in overdue, if it's a movable asset, because you have to first of all ascertain the availability of the stocks. Otherwise, you are just paying the premium to the insurer. And in case of a claim, what happens? Insurer will ask the detailed stock statement for the last 10 months or 12 months or 6 months. Insurer will, when something happens, only insurer will ask for so many things he will ask. So don't renew it. So you have to find out the availability of stock. If the stock level has come down to 5 million, then you have to reduce the cover to 5 million, because otherwise what will happen is you are just paying the premium to the insurer, and they are covering an asset which has no value. Is it clear? Is it clear to you all?
So stocks levels are always fluctuating. So at the time of visiting, stocks may be not in a big scale, but if customer purchase a big stock next day, yes. So if the insurance cover is not there, if something happens again, the customer has the right to take action against the bank, no sir?
No, because when you are getting the insurance policy, you will be taking a policy for a 10 million or something. It could fluctuate, but one of the condition is the customer should always have 10 million worth of stocks in his possession. So that is why we are tracking the adherence to that aspect by calling for regular monthly stock statement. We are calling for regular monthly stocks. As you say, stocks may today my stocks may come down, the following day it could fluctuate. That is the reason why we want the monthly stock statement. From the monthly stock statement, you can track that. In addition to that, some big organization, big entities, they take a insurance policy on a declaration basis. That is a very difficult task for us to monitor, but they take a policy on a declaration basis where you have to monitor the fluctuation of the stocks daily. That is very difficult. It's very difficult for the bank and also for the customer. But there are some customers who are taken to avoid the premium, high premium. They are taking a policy on a declaration basis, which normally we don't encourage, because in that case, it's a big responsibility of the bank to daily monitor it, and the customer also has to daily monitor. And if he has not sent the policy, the declaration to the insurer, insurer may disclaim liability. So the safest is declaration basis also taken for big entities, where you find if they have a effective system, if they are big companies where they have effective system, you can take it on a declaration basis. Other than that, we have to take this thing. So how do you track it? By taking regular inspection. Now, if you feel, the good question you ask, if you feel this particular customer is coming under the vulnerable lot, then not only monthly inspection, you may have to carry out weekly inspection also. If you feel this particular customer, there is room for any manipulation, or then you may have to carry out periodical surprise inspections. Is it clear? But we can track it by calling for the monthly stock statement. That is the reason why the monthly stock statement is a must. When the stock statement comes, you have to check it and see whether the stock level is the original level is still maintained. Is it clear?
Yes, sir.
Right. Good questions. It's a very interesting area, insurance, and I must thank you for asking the question, because it will give me an opportunity to explain, and others also. It's a learning process. So, yes, Miss.
There is a practice of giving 60 days period to pay the insurance. They renew the policy and they give 60 days time period to pay the premium.
Yes.
So in between, if there is if something has happened, will the customer will the insurer say?
He will pay. Insurer will pay.
Can
Insurer will pay, because why? He has given a 60 days credit period, which has been stipulated by the controller of insurance. Because if within the 60-day period, if something happens, also insurer will pay. Insurer will pay. He is liable to pay. Why? The 60 days is a existing arrangement given with the concurrence of the insurance board. All the insurers have been authorized to give a extension period of 60 days to make the payment. Now, the 60 days, earlier the 60 days was not there, because they don't pay the premium. It goes on for months and months. That's the reason why the insurer, I think the board of insurers, they intervened and made it mandatory 60 days. If you don't renew the policy, if you don't pay the premium within 60 days, the policy expires. Insurer is not liable to honor the claim. So within the 60 days, if something happens, insurer will pay. Insurer will pay within the 60 days. Now, if you take for instance, I buy a new car. I bought a new car. I have not paid a premium, but the insurer says I have a 60 days credit period. Within the 60 days credit period, if something happens, the insurer will pay. They are liable to honor. Is it clear?
Yes, sir.
Yes.
Yes, sir.
Right.
Thank you.
Now, right. This is the particular book which I told you all. Now,
Sir,
yes.
sir, I have a doubt. There are leased premises, no? The branches can operate in the leased premises.
Yes.
In that case, the insurance cannot be assigned favoring the bank. It's
Right.
already in the customer's name.
Yes.
If it gets expired and if the customer is not
Renewing.
renewing the insurance,
Yes.
during that period, if anything goes, what's the action, sir?
No, even that particular policy means, even though the customer is occupying, the ownership is with the customer, we must get the insurable, the interest, we must get the assignment intact. Assignment, we must get the assignment. If we have,
Favoring the bank.
yes, if that particular building, but we have an asset, if that is our security, we have to get the insurable interest by assigning the policy in our favor, even lease asset also.
Okay.
If the customer doesn't renew, we'll have to renew it. So this is the particular book I was telling you all. I spoke to the gentleman who is in charge day before. He told me that some people have made requests and he have made arrangement to send it. So if you all are interested, you can speak to him. He will arrange to mail it to you all. He will arrange to mail it to you all. And again, I am telling you all, the money what you spend is not for me. It's going to the Sri Lanka Cancer Society. Already I have remitted 5 lakhs to Sri Lanka Cancer Society. Otherwise, people might think that this man is promoting a book which I have no interest, because no interest in the sense, this particular book, when you buy it, it enhances your knowledge. At the same time, the money what you pay goes to the Sri Lanka Cancer Society. Up to now, 500,000, 5 lakhs have been remitted to the Cancer Society. All sale proceeds of the book. So if you are interested, you can buy it, because this is a very useful book for you, covering securities. So now this is the end of my session, this particular part. End of my session anyway, I will give you further time. Now I am going to take you all to my next session. Sorry? Can you all see this slide?
Yes.
Right.
Yes, sir.
Can you all see? Right. Very good, because sometimes technology also, sometimes something goes wrong. Can see, everybody can see now? Everybody can see? Yes or no?
Yes, sir, we can.
Right. Very good. So now this particular slide, session is about bank guarantee and its operational aspects. This is also an area which I like, because I was in charge of this at HNB for more than 10 years. Bank guarantees also came under my purview. For more than 10 years, I was in charge of it. So I have come across a lot of complicated cases, which I am going to share. Bank guarantee, because bank guarantee also we have incorporated in our syllabus this time. So in the handout, in the short questions what I gave, there are 1 or 2 questions about bank guarantees also. I think you can answer that, or you can go through the handouts, or after listening to my presentation also you can answer, because this is also very interesting case. Now, bank guarantee. An insight to bank guarantee. When I am going to talk to you all about bank. When you say banker's obligation about bank guarantee, now when I'm going to ask you again some questions. When you grant a facility to a customer, and when the customer defaults, and if you are granted the facility against a guarantee against a personal guarantee of 2 individuals, if the customer defaults, what happens? You write to the borrower, you write to the guarantors and demand the payment. Am I correct? Am I correct? Yes or no?
Yes.
And if they fail to honor do they come and pay it? According to your experience, when you write to the guarantor comes and says, "I have got your letter, I am going to pay it." Have you ever come across? Have you ever come across? Never. Very good. Even I had never come across. In my 46 or 47 years of banking experience, I had never come across a situation where when we write to the customer borrower fails, then we demand the payment from the guarantor comes and pays. It has never happened. It has never happened. It has never happened, and it will never happen also. But the guarantee what we bankers give, we are also giving guarantee. The guarantee which we bankers give is a guarantee, is an irrevocable undertaking which is payable on demand. If we give a guarantee, if we as a bank, if we give a guarantee to an organization, if the moment they demand, we are liable to pay it immediately. Not only we are liable to pay it, we have to pay it immediately on demand without any contestation, demur, protest. So that's why I always say when I take this subject, because I have enough experience in this particular subject, I was in charge of it. I always tell my people, in a bank guarantee, remember, your lips are sealed. Your lips are sealed. You can't talk. If a claim is made, you can't talk. You have to pay it. Why do I say that? Look at this particular slide. banker's obligation on a bank guarantee. To understand the concept of the operation of a bank guarantee, let me take you all to a particular scene in the play Merchant of Venice by William Shakespeare. Now, if you have the time, you can go through this particular scene. What happened in this particular Shakespeare's Merchant of Venice? Merchant of Venice, I think, yes, in that Merchant of Venice, there is an episode where there was a person called Shylock, a businessman. This Shylock had some animosity towards another businessman called Antonio. This Antonio was also a businessman. Shylock and Antonio, they were not in talking terms. They had some animosity according to Shakespeare's that particular scene, play. Then Antonio had a friend called Bassanio. I'm just taking you all to make it interesting. Bassanio. So Bassanio wanted to borrow some money from Shylock because he was, for business purpose, he wanted some money from Shylock, and Bassanio said, I am 100% sure I can settle the money within the stipulated period of 2 months or 3 months. I don't know the time period. Let us take it as 3 months. I can settle the money because I am getting my shipment. My shipment is expected. I can easily settle it. And he went to Shylock and asked for the money. And he said, I want a loan. But he told, I can pay the money because my shipment is coming. And definitely I will pay the money. But did Shylock say? Shylock said, okay, I will pay the money. I will give you the money, but I want a guarantee from Antonio, because Antonio was Shylock's enemy. So he wanted to teach Antonio a lesson. He said, okay, I will pay the money provided you get a guarantee from Antonio. Then what did Shylock say? He said, I don't want just a guarantee. He said, the guarantee, in that guarantee, what I want to say is, if you fail to honor the claim, if you fail to settle the loan, you are saying your shipment will come, you are 100% sure shipment is coming. So I know you are settling, but if you don't pay, if there's a delay in your shipment, I want Antonio, I don't want Antonio to pay. I want Antonio, he says, I want 1 pound of flesh from Antonio. This is what Shakespeare says. The Merchant of Venice traces the difficulties Antonio had after his bond becomes due to Shylock. There was animosity between Antonio and Shylock. Antonio was confident of his ability to repay the debt prior to the expiry of the bond. Shylock, rather than settle for the money, suggests a pound of flesh should Antonio is unable to settle the debt. Antonio couldn't pay as agreed. Now you can see Antonio couldn't pay as agreed as there was a delay in his shipment. Antonio couldn't pay the money because shipment got delayed. Then he has gone to Shylock and told Shylock, my shipment got delayed, I can't pay. Shylock said, okay, look at the bond. What did I say in the bond? I want 1 pound of flesh from Antonio. 1 pound of Antonio's flesh. His lawyer pleads from Shylock to show mercy to Antonio and accept money instead of the pound of flesh. But Shylock refuses. Now here, you can see Antonio. Now Shylock is with a knife. He says, I want to take 1 pound of flesh. Because that is the bond, the guarantee bond, what you have given. You have said, if the shipment doesn't come, if Bassanio doesn't pay, I have the right to take 1 pound of flesh. I am going to take 1 pound of flesh. Can you take 1 pound of flesh? What will happen? This man will die. But Shylock was sincere. That's why sometimes when we come across episode, we say, man, he's like a Shylock. No? In our normal this thing also, we said, that fellow is like a Shylock. No, he's demanding that. Why? Because Shylock wanted 1 pound of flesh. What happened? Antonio couldn't pay as agreed as there was a delay in his shipment, Shylock demands his pound of flesh. His lawyer pleads from Shylock to show mercy to Antonio and accept the money. Instead of the pound of flesh, Shylock refuses. Ultimately, the lawyer managed to take comfort under a loophole in the bond. What is a loophole? Lawyer says, okay, you can take the agreed pound of flesh. Lawyer says, you can take the agreed pound of flesh. However, you cannot spill any of Antonio's blood, as this was not agreed. He has told, you can take the flesh, you take the flesh, but you can't spill any of Antonio's blood, and this was not agreed. In the guarantee, you have just said, take the flesh, but it doesn't say that you can spill blood, so you take. Without spilling any blood, if you take, I have no objection. So can you take? You can't take it. So ultimately, Shylock has to agree in accepting the money. Shylock has to agree in accepting the money. I have seen this particular Shakespeare when we were studying in our school. Our English teacher used to, nicely act like Shylock, and that's why it's still very fresh in my mind. So you can take the agreed pound of flesh, however, you cannot spill any of Antonio's blood. So there was a loophole. There was a loophole in the guarantee bond, which Shylock has accepted, and the lawyer took comfort under the loophole. Why I am talking about this particular aspect, you could see here, this I got it from the internet. Obligation of the bank under a bank guarantee. When we talk of bonds, guarantees and undertakings, various aspects comes into our mind. However, our bond, the bond which we bankers issue, is essentially a financial obligation, nothing beyond this. This concept should be clearly understood by all of you all, because the guarantee what you bankers are issuing, we bankers are issuing, is only a financial guarantee, not like this Shylock's guarantee where we look at the bond. Customer can say, beneficiary can say, look at the bond. In the bond you have said, you will pay the moment demand is paid, you will pay without any contestation. You can't contest. Shylock, of course, there was a loophole in the Shylock's one. There was a loophole. So therefore, the Antonio's lawyer made use of the loophole, and ultimately Shylock has to agree to accept the money. But here we bankers are issuing guarantee. Our guarantee is basically solely, merely, it is a totally a financial obligation, nothing else. I can give you a good example. We issued a guarantee favoring Sri Lankan Airlines many years ago. What was the guarantee? On behalf of one of our customers, we issued a customer, Sri Lankan Airlines wanted, they are called for quotation or some all these things, and then they have one of our customer was given the contract to supply uniform to Sri Lankan Airlines. So we, as a bank, we issued a guarantee to Sri Lankan Airlines, and we said, at the request of our customer, we are issuing a guarantee for 10 million, and you can make a claim. I will give you in shortened form. You can make a claim in case the uniform supplied by our customer is not up to your specifications. We hereby confirm that we will pay you 10 million on demand without any demur contestation. So this customer, when we contracted with Sri Lankan Airlines wanted a bank guarantee for 10 million. Because why? So they have given some specification. They have told the customer, the uniform what you supply should be according to our specifications. And if we find the uniform supplied by you were not up to a specification, we should be in a position to claim 10 million. So we, HNB, we issued a guarantee for 10 million favoring on behalf of this particular customer to Sri Lankan Airlines, 10 million. In the guarantee, we have said, we hereby confirm, or we hereby say that uniform, in case if the uniform supplied by you is not up to your specification, we will pay 10 million. We are not gone and checked whether the customer uniform up to our standard. We issued the guarantee. What happened? One day, one gentleman walked into our bank. He came to me because I am the main signatory of the bank guarantee. So when a claim is made, our heart beats fast. He said, I am coming from Sri Lankan Airlines. This happened many years ago. I am coming from the chairman's office. And he said, and gave the letter. When I opened the letter, addressed to me, they have put the guarantee number, everything, 10 million. In terms of this guarantee, since the customer has failed to honor the terms of the contract according to our contractual agreement, we hereby demand 10 million from you. That was a letter. That was a letter. Simple letter. So he came and he was seated in front of me. And he told, I was asked by our chairman to collect the draft and come. Now, how can I issue 10 million draft immediately? I have to issue. So then I told this gentleman, okay, can you give us half an hour's time? We will have the draft ready. He said, then I will sit here. I will say, can I say? I said, you can sit there, but give me half an hour's time. He was seated there. He was seated there, and we couldn't issue the draft within half an hour because there are certain things which he had to do. And every time, every half an hour or so, he was coming and looking at me and asking these things. I said, wait there. So when we got the claim, I am asking you, if you have got a similar claim, what is the first action you will take? Now I have explained to you all the Shylock story and some other things. According to you, if you have got issued a guarantee and if you have got a claim, what is the first thing you will do? What's the first thing you will do?
Carefully examine the bond.
Yes, very good. Very good. You will first, yes, very correct. First thing you will do is you will take the file and check the guarantee. When the guarantee what we have issued, whether everything is covered. You will see whether that's the first thing you will do. Okay, very good. What is the second thing you will do? What's the second thing you will do?
Whether the principal is claiming the guarantee. So this is issued for a particular purpose to a particular organization. So organization.
Sri Lankan Airlines. Sri Lankan Airlines. It has come from Sri Lankan Airlines.
So it has to be signed and claimed by Sri Lankan Airlines.
Yes, that's right. That's also correct. But it came on a Sri Lankan Airlines, letterhead. Two authorized signatories have signed. So we have, we were convinced it's from Sri Lanka. Very good. That's also true because you had to find out whether it has actually come from Sri Lankan Airlines. So you had to check those things. Very good.
They have to submit the original bond also along with the claim. No,
no, not necessary. Original bond submission, original bond is not necessary. Not necessary. So only the letter. Now the first two questions, all two answers given by you all are very valuable answers. Very good. These are things which you have to do. First, you have to, the lady said, the participant said, you have to first take the file and check the guarantee and see whether everything is what we have said is correct. Then the second one is what you said, very correct. We'll have to be convinced that it has actually come from Sri Lankan Airlines. We are convinced. What's the next thing what you'll do? So these two aspects you have confirmed. You have complied, but means you are satisfied. What's the next thing you will do? What is the third thing you will do? You are the manager.
Contact our customer who asks us to issue the guarantee.
Yeah, very good. Very good. That's the correct answer. You will contact the customer. Very good. You will remember, we are not under obligation to contact the customer. We have issued the guarantee. We are not under obligation to contact. But anyway, as a matter of courtesy, we contact the customer. So I contacted this particular customer. I am the person who gave a call to this particular customer, and I told him, I have got this is regarding that guarantee what we issued. We have got a claim from Sri Lankan Airlines. What do you think the customer would have told? What do you think the customer would have told me, according to you, when you contact the customer?
Generally, customer always telling the bank not to honor the claim.
Right, very good, very good. Customer always, you are correct. Customers always say, he said, no, Mr. Rajana, don't pay it. He said, don't pay it. I asked, why? No, I have supplied the uniform according to their specifications. How can they claim? How can they claim? He is telling me, how can they claim? Because I have submitted the uniform according to their specifications. Sri Lankan Airlines says, no, the uniform supplied by him is not up to our specification. This gentleman, customer, is telling, no, don't pay it. It is up to, I have supplied up according to their specification. It's always like that. They are very difficult to satisfy them, he says. Then what happens? Now here, the beneficiary is at my throat like Shylock with a knife. And here he is telling, don't pay it. Then there's a deadlock. What have I got to do? Then I had to stop my work, take a fashion designer, go to Sri Lankan Airlines, check the uniform, get the confirmation from the fashion designer to confirm the uniform supplied by our customer is is in accordance with the specification of the Sri Lankan Airlines. So there's a deadlock. So I had to stop. That is not my work. My obligation is to honor the claim. My obligation is to honor the claim. Whatever the customer says, my obligation is to honor the claim immediately without any delay. You may issue guarantee for various purposes. That's why I'm saying, well, like what Shylock said, look at your bond. Look at the bond. Where there are any loopholes. You have said, that's what I always say, your lips are sealed. You can't talk. And that gentleman who was there, actually we didn't issue it in half an hour's time. It took about 2 hours because we had to go. I can't just go and issue because since it's a big amount, I like to speak to our superiors, and so there was a delay. So every time the gentleman was looking at my face, he was seated at the reception area. I was coming in. I said, wait. He said, no, I had to go. He said he was told by the chairman to collect the check and come, draft and come. And the danger is, if we had delayed, then Sri Lankan Airlines would have taken a decision not to accept any more guarantees from, because the acceptance depends on the speed in which we deliver, we settle claims. So then what happened? We debited the customer's account. We debited whether there's money or not. Whether there's money or not. Even if you have no money, we'll have to overdraw the account. We debited this particular customer's account and settled the claim. We settled the claim in full. So remember, we are issuing guarantees for a variety of purposes. But our obligation finally boils down to cash. It's only a financial obligation. Now, as you quite rightly said, customers always protest. No, don't pay. They say, don't pay. Don't pay it. But we are not under obligation to tell them, but as a matter of courtesy only, we tell them. Is it clear? Yes. Yeah.
So now, if we don't collect the original guarantee,
yes,
so they will leave the room to claim it again and again.
No, that can't happen. No, that can't happen, because original guarantee, we don't insist on the original guarantee. What happens is, when we are making the payment, we are giving them a bank draft. So there is no question of duplicating the claim. But the only thing is, after issuing the guarantee, after issuing the draft, we will tell them, we will send it with a covering letter in terms, this is in reference to the above guarantee, and your letter dated dash. In terms of our obligation, we are enclosing our draft for 10 million. And please note, all our liability under this guarantee have now been fully extinguished. We use the word extinguished. They're like a fire extinguisher. We said it is fully extinguished. Kindly return the original guarantee for our records. Kindly return the original guarantee for our records. So there is no case of any duplication. The reason is because let us assume if you have issued a guarantee in my favor, I don't want to part with the original guarantee till you settle the claim. Am I correct? Till you settle the claim. So there is no necessity to insist on the original, because I have seen some people say, no, you have to bring the original. No, it's not necessary. It's not necessary. You, in the draft, you say, our obligation under this liability is now fully extinguished. Please return the original guarantee for our records. Guarantee will be cancelled. Is it clear? Is it clear?
Yes, sir. Generally, in the practice, we, as our banks, we inform the principal to return the original also, sir.
Not necessary. Yes, not necessary. Not necessary, because it's very unfair for us to ask for the original guarantee because we are not settled the guarantee. So the beneficiary can say, "What is this? You are not settled the guarantee." No? So he is telling us, he is quoting that particular guarantee and only claiming. So once when we are settling, in the covering letter, we will say our liability under this claim is fully extinguished. Please return the original. So we are not, even if he makes another claim, we are not going to honor it. We are not going to honor it because we have clearly said we can prove if we have settled the claim. So insisting the original guarantee is not a must. Is it clear?
Yes, sir.
Right. Then we are coming to the definition of a bank guarantee. A bank guarantee is an abstract and an irrevocable undertaking given by a guarantor to effect payment against presentation of a statement by the beneficiary to the effect that a contractual agreement has not been fulfilled. It is a collateral promise to answer for a debt, default, or miscarriage. It is a readily accepted form of security, easy to obtain and complete. It's a very simple form of document. International guarantee, doing business with entrepreneurs in foreign countries, involves greater risk than doing business in our own country. You will find it extremely difficult to assess the integrity of the entrepreneur and the ability to execute an undertaking due to your inability of accessibility as they are thousands of miles away. This explains the great importance of the bank guarantee, which acts as a safety net for both parties. Now, important aspects of local and international guarantees. All guarantee what you issue is a surety of a guarantee issued by a bank on behalf of the customer for the benefit of a domestic or foreign beneficiary. A foreign guarantee refers to an obligation issued for the beneficiary, for the benefit of a beneficiary in a different country. Now, if you are getting a foreign guarantee, that bank will issue a counter guarantee to a local correspondent here, and then we, in turn, will issue a guarantee to a beneficiary in our country. An exporter or an importer could request for a bank guarantee from its foreign trade partner to guarantee the fulfillment of a contractual obligation. It is advisable for the exporter-importer to ensure, with the assistance of their bank, that the guarantee issued is valid and binding. Standby letter of credit is a guarantee in a form of a letter of credit. It is an obligation in relation to the main contract and subject to the ICC Uniform Customs and Practice for Documentary Credit by the ICC. The standby letter of credit, although treated as a documentary credit and covered in the UCP, essentially it covers the functions of a bank guarantee. The standby letter of credit was originally developed in the United States, as the American laws prohibit the terminology of bank guarantee because they don't use the word bank guarantee. Evolution of guarantees, the issuance of guarantees has developed to a great extent, as a result of which, in today's business world, the buyer wants to ensure the other party fulfills its obligation. In international trade, it is difficult for the importer of goods and services to accurately assess the professional ability and financial stability of the exporter, supplier, who is thousands of miles away. Under this context, bank guarantee plays an important role and becomes a bridge of trust. Now, guarantees. In banking, the use of guarantees and its risks should be clearly understood by the bankers involved in making the important credit decision. Always remember the Shylock story and remember that your lips are sealed. You can't talk. This is a very high risk instrument, and at the same time, it is also highly remunerative because banks are earning millions of rupees as commission in bank guarantee. Simply, we are giving only a correct certificate and earning millions of rupees as commission. This guarantee is completely different from the guarantee we as bankers obtain from various individuals, firms, and corporate entities to secure our exposure. Obligations under such guarantees are rarely fulfilled, but our guarantee, standby letter of credit, also falls under this guarantee. So our guarantee is not only payable on demand, payable on first presentation without any contestation, without any demand or protest. You can't protest. Guarantee on first demand, guarantee on first demands are widely used in the international and local trade. They are payable on first demand, and the bank cannot and has no right whatsoever to refuse or postpone the payment. The bank is obliged to pay the beneficiary on first demand after having examined the provisions of the guarantee, its validity, and all other connected aspects. In one of the banks where I was attached to, I went on inspection to one of the branches. So I was going through their credit files. Then in the credit file, I came across 3 or 4 reminders sent by the beneficiary on a bank guarantee issued by these people. Then I asked the manager, what is the position of this claim? Have you settled it? He said, no, sir, we have not settled it. I said, when are you going to settle it? Here, the beneficiary has been sending reminders after reminders, and these people have been sitting on the guarantee claim because they don't understand the concept of the bank guarantee. I said, no, you can't. I said, if you allow them to send reminders, nobody will accept the guarantee of our bank. So I said, you have to settle it. There is no necessity for them to send reminders. Immediately you get the demand, you have to settle it. You can't ask for time. You can't ask for time. Will you write and say, can you give us 1 more week? No. You can't even give them 1 day. You have to settle it immediately. You have to settle it immediately. The bank is obliged to pay the beneficiary on first demand, and after examining the provisions of the guarantee, that means you have to take your guarantee file, check the provision, its validity, and all. That's what one of the participants said. First thing, we have to check the file, its validity, and all other connected aspects, because they had to honor the claim within its validity. I will explain it later. Then guarantee and indemnity. We have already explained this in our previous session. In a guarantee, the guarantor undertakes the liability on the default of the primary debtor. The guarantor says, if the principal does not pay, I will pay. Indemnity. In an indemnity, the indemnifier undertakes to be principally responsible for the debt. That is, the indemnifier undertakes to be principally responsible for the debt. Now, important factors of a bank guarantee. What is a guarantee? Why a guarantee? What are the benefits? Now, what is a guarantee? It is a cash transaction. It is only a cash transaction. You may issue guarantees for various purposes, variety of purposes, for this one, for that one, everything you will say. But ultimately, it boils down to a cash transaction. Why a guarantee? What is the reason we are issuing a guarantee? To meet the financial, technological, and various other types of obligations. What are the benefits? Advantage with regard to the liquidity, because the customer need not go and block his fund. Bank need not, if you are granting a loan to a customer, if you are granting overdraft to a customer, you have to release the funds. Here you are simply, there's no necessity for you to block any funds, because simply on your letterhead, you are issuing a bank guarantee. That means you are issuing a correct certificate. Both for the customer and the bank, it is advantage for both for the customer and the bank. Less documentation, resources management, time. Unlike other facilities, when you are issuing a bank guarantee, that's the end of the story. You issue a bank guarantee, you put the document in the file, just you don't have to do anything. You don't have to even send reminders. You don't have to even send. You should never ever send reminder. Remember, when you are issuing a bank guarantee, remember, I came across a situation in one of the banks. These people are sending reminders to the beneficiary. Is it necessary to send reminders? Is it necessary? Is it necessary to send reminders to the beneficiary? Yes or no? when you are issuing a bank guarantee, say Sri Lanka Airlines, you issued a bank guarantee 10 million expiring on 31st of January. Is it necessary for you to send a reminder to Sri Lankan Airlines reminding them the guarantee is due for expiry on 31st January? Is it necessary?
No, sir.
Not necessary.
No, not necessary. You should never ever send. Remember, because I came across a situation in one of the banks where they have been in the habit of sending reminders. Don't ever send reminders. So that means if you are sending reminders, you are reminding the beneficiary, come and please come and lodge the claim. No, don't ever send the reminder. Send any reminder. You issue the guarantee, check the guarantee very carefully, expiry dates, everything is there, put it in the file. That's the end of the story. Don't ever send reminders. That is a resource, desk, documentation, resources, management, time. Then highly remunerative to the bank. You are highly remunerative because you are getting your commission upfront. You are getting the commission upfront. Unlike other facilities, the customer will have to pay the commission due to the bank before we issue the guarantee. Then 3 important concepts in bank guarantee: protection available on a bank guarantee, attestation, motivation, compensation. Now, parties to a bank guarantee, applicant. In a bank guarantee, there's a question in a bank guarantee, but how many parties are there in a bank guarantee? 3. Name the parties. The answer is here. The customer who seeks the guarantee facility is the applicant. The entity to which the guarantee is issued is the beneficiary. Then parties to a bank guarantee, the guarantor is the bank. Applicant. When you say applicant, the applicant is the entity which makes a request to issue a guarantee which is based on their contractual obligations. How does a bank guarantee work? Applicant, then first the customer will come to the bank, make an application, then the bank will issue the guarantee, then the guarantee direct to the beneficiary. Then in international guarantees, there is advice in bank. In international guarantee, there is advice in bank, but in a local, of course, there is no advice in bank. You can. So this is how it works. The applicant will follow at the bank, make a request to the bank, and the bank issue the guarantee direct to the beneficiary. The advice in bank generally doesn't come to the scene here unless if it is a foreign guarantee, which I will explain later. Then guarantor. Guarantor is the bank which is called upon to issue the guarantee at the request of the applicant to the beneficiary. The guarantee is under the primary obligation to make the payment to the beneficiary on first demand in the event of a default of the obligation or non-fulfillment of the contractual obligation. Beneficiary, when you say beneficiary, the beneficiary is the entity, person in whose favor the guarantee is required to be issued. It is such entity which makes a request for a guarantee under varying circumstances, depending on the event, thereby protecting themselves by a monetary gain in the event of a default or non-fulfillment of the contractual obligations. Applicant, beneficiary, guarantee. Now, important aspects to be checked, considered on a bank guarantee: integrity, security, guarantee. Now, I will adjourn. I can give you 10 minutes. 10 minutes. Dogs also barking. So we will meet at 11:10. Is it clear? 11:10. Shall we start?
Yes, sir.
You can see the slides, no? You can see my image?
Yes, sir.
Right. So 11:10, I will continue. What about the others? I must hear some more voices. Yes, all are there?
Yes, sir.
Right, fine. So important aspects to be considered in a bank guarantee. Now, before I adjourn for tea, I just spoke to you all about the parties to a bank guarantee. There are always three parties to a bank guarantee. There are always three parties to a bank guarantee. Number one is applicant. Number two, beneficiary, guarantor. If there's a question, name the parties to a bank guarantee. The answer is there are always three parties to a bank guarantee. Then important aspects to be considered in a bank guarantee. These are the two important aspects which you have to consider in a bank guarantee, unlike other facilities, because by here your obligation is payable on demand. So number one is you have to see the integrity of the party. You have to see the integrity of the party. The integrity of the party. Then number two is the creditworthiness, security. Whether in case of an eventuality, what is the mechanism available to you at your disposal to honor the claim? Because you have to honor the claim immediately, on demand. Within a few hours, within a few minutes, you have to honor the claim. So integrity and security are the principal components of a bank guarantee. Integrity and security are the two major components in a bank guarantee. If you are satisfied with these two, with these two aspects, then you can issue the bank guarantee. Then security aspects for a bank guarantee. When we are giving guarantee, as you know, the securities consideration is a vital element. The guarantee constitutes a major credit risk, hence generally the banks call for strong security. Generally marketable securities are preferred. However, the integrity of the principal plays a major role in determining the risk involved. There are instances we have issued guarantee without any security also. I could tell you all, we have issued billions, not millions, billions of facilities without any security to various corporate entities. Why? Depending on their past performance, their integrity, creditworthiness. There are instances we have issued guarantees without any security, integrity. So security aspects for a bank guarantee is also important, but at the same time, the integrity also plays a major role. Generally, marketable securities are preferred. However, the integrity of the principal plays a major role in determining the risk involved. Bank guarantee and its introduction and type and its type. There are, when you say bank guarantee, there are a whole heap of guarantees which we bankers are issuing. When you say bank guarantee, so let us examine the types of guarantees. Now, when you say bank guarantee, there are various types of bank guarantees. Listen to this very carefully. I am going to explain the types of guarantees and the circumstances under which such guarantees are issued for your own knowledge. This is very important. There may be questions also, but for your own knowledge, you should know the concept and how these guarantees work. Number one is tender and bid bond. What do you mean by tender? Now, some people call this, some say tender, some say bid bond. Bid, all are same. So what is your understanding of a tender or bid bond? Now, to give you a good example, let me give you a good example. Now, today is Sunday. When I open the papers, Sunday Observer or somewhere, I see a big notice. There's no such notice. I have not even seen the papers today. But I assume that there's a big notice. What is the notice? This notice has been put by Sri Lanka Telecom. They have put a big notice, and they have said, Sri Lanka Telecom has said, we want to computerize our HR division. We want to computerize the HR division. I'm just using simple English so that you could understand the concept. Let us assume Sri Lanka Telecom is having about 5,000 employees under them. So they have decided that we want to computerize the HR division, the personal files, everything they want to computerize. Otherwise, all these years they have been doing it manually. Now they want to computerize the entire workforce at Sri Lanka Telecom. So they say this is a very big project. It will cost about 250 million. They say it will cost about 250 million. So we are hereby we are calling applications from prospective people who are capable of undertaking this contract. So that means Sri Lanka Telecom says, we want to computerize the telecom, our head office, HR division. The entire project will cost about 250 million. So if there are people who are interested in undertaking this task, we invite them to apply. So that is what is called tender bid. Tender bid, you know. So here only the tender bond will come into force. So let us forget about the tender bond. So when you see that particular notice, as an ordinary layman, as an ordinary banker, you also will be, sometimes you also will be attracted in applying for that. Now today we find most of the people are, young people like you all are very, very thorough in IT. Everything, you know, at the click of a button you can do anything, but when you face any problem, anything also, you are in a position to, in some of the banks, we have seen young people like you all, they are very, very competent in IT. They are very, very competent. There are so many features available, which we are now. We know some basic, but some other things, they are very, very competent. So some of these people, some people who belong to that category also see this particular application, notice, and they say, you know, 250 million project, it's a very good project. So why not we also apply? Because we also enough friends in IT. In the IT field, we also have a lot of people. We also have enough people in IT. So why don't we just try and see? We also just apply. And sometimes I also will be tempted to apply because now I am at home. Why not apply? And then we apply. All the sundry people also applying, like me, like so many people who are IT and all. They all are applying. People who have known, you know, they are people who have not known knowledge in IT are also applying. A lot of people apply. Sri Lanka Telecom has got about 1,000 applications. So how to select? So their selection process, yes, not only become difficult and harder, they can't select. From the 1,000 people, how can they select? Because 1,000 of people, still applications are pouring in. Still applications are pouring in, like applying for jobs. But in their notice, they have put a clause. All applications should be supported by a tender bid bond for 10 million. The project is for 250 million. Project is for 250 million, but they have put a clause. All applications for this tender should be supported by a bank guarantee from a local bank, not foreign bank. No beneficiary will accept foreign bank guarantee. It has to be from a local bank. So when they put that clause 10 million, you had to, and they give notice within 7 days you have to submit the bid. So when they put that particular stipulation, what happens? All the sundry people are eliminated. They can't apply. Can an ordinary man go to a bank and get a bank guarantee for 10 million? Can he take? No. Is it correct? Do you all agree? You can't take. So only the cream, only the people who are confident, who have proven integrity, will be in a position to go to a bank and get a bank guarantee for 10 million, tender bond. So the reason why they put that stipulation is to eliminate all unnecessary bids and to make their selection process easier. So that is what is called, defined as tender bond or bid bond. Both are same. Is it clear to you all? Any questions on that? Any questions? So you should know how the mechanism works, guarantee. Is it clear? Right. Now when you say tender bond, what do we say? Why they want the tender bond and bid bond? One reason is they want to eliminate all the unnecessary people. But the reason the tender bond, what they want is, they want a guarantee tender bond from a bank. The bank will have to confirm that in case, at the request of so-and-so, we are issuing this tender or bid bond. And in case if the tenderer refuses to accept the contract after giving to him, we will pay 10 million. That means now let us assume Sri Lanka Telecom, because of this particular clause, they have got only 10 applications. So their selection process is very easy. selection process is very easy. So they have got only 10 applications. So from the 10 applications, Sri Lanka Telecom has selected one leading IT company. I don't want to name. For example, we say ABC IT company. ABC IT company. One of the leading, I think, I don't know whether there's any company by that name, but just to make it easier for you to understand, let us assume Sri Lanka Telecom has selected ABC IT Limited. They say there is one out of these 10 applications, they have selected ABC IT Limited. And they write to ABC and say, we are pleased to inform that with reference to our tender, we are pleased to inform your tender has been accepted. Your tender has been accepted. Then the ABC IT company will have to write back to Sri Lanka Telecom and say, thank you very much. We hereby confirm accepting the tender. So the moment ABC IT company accepts the tender, your liability under this guarantee becomes extinguished. Your guarantee is fully extinguished. Your guarantee ceases to be in value. That's what you are saying when you are issuing the guarantee. Unlike other guarantees, here you are telling Sri Lanka Telecom, in consideration of your granting this tender to so and so, in case if you grant, and if they refuse to accept, we will pay 10 million. And at the same time, we say, please note this guarantee, our obligation becomes null and void once they accept it. So here they have accepted it. So your guarantee is cancelled. Once they accept it, Sri Lanka Telecom will return the original to you, or you can write to Sri Lanka Telecom and ask for the original. Your liability is over. Your liability is over. But in case if Sri Lanka Telecom writes to ABC and IT company, Sri Lanka Telecom also took about 2-3 months. Let us assume they are taking about 3 or 4 months. You issue the guarantee, but still guarantee is in force. They are taking about 3 months to decide. Then after 3 months, they decided, okay, we'll give to ABC IT. They are right into ABC IT company and telling them, we are pleased to inform. So ABC IT company Limited, in the meantime, during the intervening period, they have got some other contracts from some leading outlets, leading organizations. As a result of which, they are not in a position to accept the tender given by Sri Lanka Telecom because they were sitting on it. So these people, ABC IT writes to Sri Lanka Telecom and thank you very much for giving us a tender. However, we regret that since you all took a long time to decide, due to limited resources, we are not in a position to accept this contract. If they write such a letter, then the Sri Lanka Telecom will demand the payment from the bank. Why? You are told, Sri Lanka Telecom, in case if you decide to give the tender to ABC and company, and if they fail, we will pay you the money. And if they accept, our guarantee becomes null and void. So this is how the tender works. And in case, let us assume, no, before I go to the next step, is it clear to you all? Is it clear? Is it clear? Yes.
Yes, sir.
Yes. So now I am coming to the next one. Now let us assume tender bond and performance bonds cancelled. ABC IT, they have accepted it. ABC IT has accepted it. So when on acceptance, your liability is cancelled. So ABC IT is giving a call to your bank and telling, you can cancel our guarantee. Why? Because we have confirmed to Sri Lanka Telecom that we are accepting, and they are sending a copy of the letter what they are written to Sri Lanka Telecom confirming they have accepted it also comes to you. So you know it's cancelled. Your obligation has been fully extinguished. So you write to Sri Lanka Telecom and telling, this guarantee is 10 days, guarantee bond is cancelled, bid bond is cancelled, kindly return the original for records. Right? That story is over. That story is over. Now Sri Lanka Telecom tells ABC and IT company, now we have decided to give it to you all. Now they are given, no, they are signed. They are asking, how long will it take to complete the entire computerization process of our IT department? Sri Lanka Telecom says, within 6 months we can do it. So they are asking, so are you sure you can do it within 6 months? Yes, we can do it within 6 months. We can do it. Then Sri Lanka Telecom will tell ITN and the ABCN company, then can you give us a performance bond for 50 million? Because they don't want to accept ABCN company's word. Because they say within 6 months we will accept. We'll complete. Sometimes they will say 6 months and then they will sit for 2 years. Then they have a problem. So they want them to know your verbal confirmation is not enough. They say, okay, can you give us a performance bond for 50 million? That means they want a bank to confirm that they will finish it within 6 months. So ABCN company comes back to the bank and tells, can you give a performance bond for 50 million? So when we issue the performance bond, we are selling Sri Lanka Telecom in consideration of your granting this contract to so and ABCN company. We hereby confirm that we will pay you 50 million in case ABCN company fails to complete the computerization of the HR division within 6 months. Within 6 months, if they don't complete, we will pay you 50 million. That is what is known as performance bond. So banks, these two, they are sometimes reputed organizations, they are giving nil, no security. But millions are made as commission. So banks, when they are giving tender, bid bond, performance bond, they are not blocking any money. All very high customers. They are only taking a commission. So that is the income to the bank. So anyway, that we will take later. That is what is known as performance bond. So then you have issued a performance Sri Lanka Telecom, you are confirmed. Now how can you confirm? How can you confirm whether, then you will also ask Sri Lanka Telecom, sorry, ABC and IT company, prudent bankers, you will call them and ask, and you will ask them what steps you are taking to complete the performance. Can you all complete it? The prudent banker will want to know whether they say, no, this is simple, we can complete it. We have enough resources. You are sure? No, we can complete it. Because we are confirming to Sri Lanka Telecom, if you don't confirm, if you don't complete, they'll demand 50 million. No, don't worry. So you have confirmed to Sri Lanka Telecom, you have confirmed. So now they have started, the computerization process started. Tender awarded, performance bond given. Sri Lanka ABC and company, they utilize their entire workforce. Now they are working at Sri Lanka Telecom, computerizing. When you computerize the human resource division, that a lot of things have to be done, looked into employees' details, qualifications, date of joining, their image, their training, their all the full history. So it takes time. So they are doing it. But what happens? Somewhere closer to the expiry of 6 months, there some problem has cropped up, and this ABC and company is telling, sorry, some of our shipments are getting delayed because they were expecting they imported some IT equipment. This shipment has got delayed. So we don't think we can complete within the 6 months. Then they are going and telling Sri Lanka Telecom, although we told that we can complete within 6 months, there is a slight delay because we want another 3 months extension. Why? Because our shipments are getting delayed. What will, according to you, what is your opinion? Will Sri Lanka Telecom agree for the extension? Will they agree? According to your opinion? According to your knowledge?
No.
If it is a genuine reason, they will accept it, no?
Yes, if they are genuine reason, they will accept it. And, they will, because there are two answers. One is they may not accept. Sometimes they may not accept. They may not accept. The probability is they will accept it. If there's a genuine reason, what you say, shipment is getting delayed, if they are convinced, if they are convinced it's a genuine reason, they will accept it. But if they are convinced, no, these people, they didn't do anything. They were just sitting. Their staff were coming and sitting here and talking with our staff. They were not at all productive. So Sri Lanka Telecom says, we have seen these people coming and they were just chatting and talking with the people. We knew very well they will get delayed. So therefore we are not going to extend it. Then they will claim it, demand the payment from the bank. They are not going to extend it because they were not satisfied. That is one option. So other answer what you gave is, if it's a genuine reason, they'll accept it. Genuine reason, they have examined and they say, okay, that's a genuine reason because shipments are, these days shipments are getting delayed because of the COVID-19 and ports, several ports and other restriction in the workforce. That's a delay, so it's understood. So these two options are there. Number one, they may refuse, like you said, one of the participants said, they will not accept. That's also correct. Second one is also correct. So let us take the second one as an example. Now, first we'll take the first one as an example where she said they will not accept it. They said no. Yes. If they say no, what will happen? If they say no, what will happen? Tell me.
They will claim
if they say no, what will happen?
They will claim the guarantee.
Right. They will claim the money from the bank. That's right. They will claim 50 million from the bank. It has happened. It has happened. If they say no, we don't want to give any, they say we are not going to extend because they were not satisfied with their work. So they have been sitting 6 months. If they have utilized their workforce in full, we could have completed because they are not done. So therefore, we are not satisfied. We are not going to extend it. They demand the payment from the bank. Bank will have to pay 50 million. That is one option. Second one is, as you correctly said, they have agreed. They have what you call the genuine reasons have been explained. So they are convinced and they say, okay, we are giving extension. So when they agree for the extension, what will they do?
They will inform the bank to extend the guarantee, sir. They will inform the bank.
Very good. That's right. So they will agree, provided the bank extends the performance bond, and then they will, Sri Lanka Telecom writes to the bank and say, we write with reference to the above guarantee performance bond issued by your bank. And Sri Lanka Telecom, sorry, the ABC IT company told us they are unable to complete the process within 6 months. Their shipment is delayed. So we have agreed for the extension. They want an additional 3 months, and they are hereby they are asking the bank to please extend the guarantee for a further period of 3 months performance bond. So letter is come. Will you extend it? I am asking you, when the letter comes, will you extend it? Sri Lanka Telecom writes to you and asks you, you will extend it? Yes. Any other answers? If the letter comes, will you extend it? Yes, you can extend it. But you can't just extend it without the concurrence of your customer. Because any deviation, any amendment to the performance bond should have the concurrence of your customer as well. He said they have agreed, but you are right back to your customer and ask whether your customer agreed for the extension. So you can extend it only with the written concurrence of your customer. Is it clear? Is it clear? Is it clear to you all?
Yeah.
You may. Why I am stressing this is there are instances which I have come across in some places. They have extended it without getting the because the beneficiary writes, please extend the. You can't extend it. Remember, you can't extend it. You have to go back to the You have to go back to your customer and get the customer's concurrence to extend it. Then if you get the customer's concurrence, you can extend it. Otherwise, you can't extend it. But what happens? Some prudent beneficiaries, what they do is, when they ask for extension, they put another clause, extension or pay. They say, the guarantee extension letter, they say we have our Sri Lanka, the ABCD wanted extension, we have given, kindly please extend this performance bond. However, if for any reason, if you are unable to extend the guarantee, please treat this as our claim. Some prudent, reputed organization, they put that clause. Then even whether you have to get the concurrent, in any case you have to tell Sri Lanka Telecom, your customer. But even if he says no, don't extend it, you are caught. Why? They have enforced the extension clause. They say, please, in case if you are unable to give us this extension, please treat this as our claim. So they have made their request to extend. At the same time, they have also lodged the claim. Now you are caught. Is it clear? Is it clear? Is it clear to you all? Any questions?
Yes, sir.
Right. So now this is the tender and bid bond. It's understood by all of you all. So then you write to the customer and ask, get the customer's concurrence. You are given performance bond. Now they are extended for 3 months. Now work is going on.
So,
Yes.
in case the customer concurrence is not given to extend the bid bond,
Yes.
so then we had to another claim clause is there, no, sir?
Yeah, we have to go. That's why I say extend or pay. Extend or pay. They will put the guarantee clause. This is done by prudent, very reputed organization. Not all. Some of the beneficiaries, they don't know that. But some of the very reputed organizations, they say, in case if you are unable to extend the guarantee, please treat this as our claim. Because if they have not put the clause and just simply ask for an extension and you are communicating with the customer, your customer says, I will give you, send you the letter. So there's a delay. The customers sending the letter to you. By the time guarantee has expired. Then later, beneficiary of this, Sri Lanka Telecom, after the expiry, they can ask you to say, we refer to our letter dated, and then you say, no, we have asked the customer says not to extend it. Then if they ask you to pay the claim, you can't pay it because guarantee has expired. Is it clear?
Yes, sir.
Is it clear? Right. Because, remember, you can't extend the guarantee without the concurrence of the customer. And prudent beneficiaries, they always use the word extend or pay. So they log the claim also with that. Then you know what is tender bond, what is bid bond. Now we will forget about the extension of performance bond. Now the performance bond as they have given, I just gave you the performance. Yeah, miss.
After the expiry of the bond, are we liable to pay at the bank?
No. After the guarantee expire, no, you are not liable. You are not liable. Because in our guarantee, we are saying all claims under this guarantee should be lodged at our counters before 3 p.m. on 31st January 2018, whether it is a bank holiday or not, after which our liability under this guarantee becomes fully extinguished, we are saying. Is it clear, miss?
Yes, sir.
Yeah. So now we will forget the extension, we will leave the extension out for a moment. Now with the performance bond, we are giving the performance bond to Sri Lanka Telecom. 50 million performance bond, you are given. Then they have started the work. So while this process is on, this ABCT and company is asking Sri Lanka Telecoms, can we have a advance of 100 million? They are asking for advance. They say, no, we have to import a lot of items and, there are some certain other things which we had to look into it, which is, so is it possible to get an advance of 100 million? They are asking for advance. There are instances they ask for a bid is over, performance over, now work is on, but they are going and asking for, while the work is on, they are going and asking for like a temporary overdraft. They are asking Sri Lanka Telecom, please give us an advance, 100 million. So that is what is known as retention advance payment guarantee. So when they say advance, when they ask for advance, Sri Lanka Telecom will insist on a retention advance payment guarantee. They say, okay, you want 100 million, we'll give you 100 million, provided you give us a bank guarantee. That guarantee is known as retention or advance payment guarantee. Then Sri Lanka, this ABCT and company, your company will come to us, customer will come to you and say, no, we have people have started the work is going on, and we have asked for 100 million advance because we have to buy some items. And there are some local charges which we had to meet. We asked for 100 million, they are asking for an advance payment guarantee. Then your bank will issue a guarantee which is known, defined as retention or advance payment guarantee. So you are giving Sri Lanka Telecom in consideration of you are granting an advance of 100 million to our customer. And in case if he fails to honor his commitment under this advance, we will pay you 100 million. Then on receipt of the advance payment guarantee, Sri Lanka Telecom will issue 100 million. They will give 100 million draft or check or whatever it is to ABCT and company. But when we bankers, when we are issuing the advance payment guarantee, remember, we put an operational clause in the guarantee. When we were at HMB, we always put the operational clause. What is the operational clause? We will say to the beneficiary, please note, this guarantee will become operational only on condition that your bank draft for 100 million favoring our customer, Mr. So-and-so, should be made payable at our counters, payable to our bank, and after you comply with that only, the guarantee becomes operational. So that means you are issued a guarantee, but this particular guarantee, unlike other guarantee, this particular guarantee is still not in operation. You are issued the guarantee, but we have the operational clause. What is the clause? We are saying that Sri Lanka Telecom, the 100 million, but they are giving, that check should come to our bank. The check should come to our bank. Why we are putting that reason is, why the bank is putting that reason is because we want, there are two reasons. Number one is we want to ensure actually whether they have released the money, 100 million to this, otherwise without releasing also they can claim. We want to know whether they actually release the money. Number two is to have a control on our customer, because after getting 100 million, this customer can go and 100 million, he will take the 100 million and go and deposit it in some other bank. He may have a variety of accounts in various banks. So now we are giving the guarantee and everything. This man is that 100 million what they have got from Sri Lanka Telecom. That money is not coming to our bank, but he wants to go and deposit the money at some other bank. He has accounts in various banks, but so that he can play with the money. That is his money. So he wants to put that money in some other bank, but we don't want to do that. So to avoid that, we put a clause. Please note, this guarantee will become operational only on the issuance of only after we are in receipt of your check for rupees 100 million favoring this customer, which will be payable at our counters. Then Sri Lanka Telecom will issue the check. They are not going to come and deposit. They will issue the check, account pay check favoring the ABC and give it. Then what happens? Then prudent beneficiaries, what will they do is, they want a further confirmation from the bank, confirming the guarantee is in operation. So they will ask, Sri Lanka Telecom will send a letter to us and say, we have issued the guarantee. We confirm we have issued the draft. Please confirm the guarantee is now operational. So then we check from the customer, have you got the check? Yes. Have you deposited? Yes, he said, I have deposited. Then we write and say, further to we write with reference to our guarantee and we write to confirm. This guarantee is now operational. All terms and conditions stipulated in our guarantee remains unchanged. Is it clear? Is it clear to you all? Any questions?
Sir, if in case the claim is made by the beneficiary,
Yes.
is there a specific method of requesting, specific way of requesting, either through register post or email or anything? Or
The claim, no? The claim.
Yeah.
Claim will come from Sri Lanka Telecom, from two authorized officers. They will send the claim. So we have to verify and see whether that claim, your question is very good, because we have to see the authenticity of the claim, whether it has actually come from Sri Lanka Telecom. We can cross-check it. Good question. We can cross-check it. But in any case, we are issuing the check. It will be account pay check favoring Sri Lanka Telecom. In any case, it will be account pay check. So we are not going to issue open check, but we'll have to see the genuinity of the claim, whether it has come from them. Then if you are satisfied, we can issue we can send the check direct to Sri Lanka Telecom. It will be account pay check. Is it clear?
Yes, sir.
Yes.
So excuse me,
Yes.
sir. So
Yes.
generally, the retention guarantees are issued when customers or the principal releases the total claim or the total contract payment,
Yes.
without keeping a percentage.
Yeah, that's right. That is also retention. That is also another instance where retention guarantees are issued. There are two instances: retention and advance payment guarantee. For that particular instance, also you can issue a retention guarantee. So we can define it as a retention guarantee. We can define it as a retention guarantee is issued. Now, what you said, when we are releasing, when they are certain percentage, that they want to.
Yeah, generally they keep a percentage for a certain period. Then only they release the whole amount. So at such time, if customer want to release the money, they ask for a bank guarantee and release money.
Retention, retention guarantee. That is also correct. retention guarantees also, when without releasing the whole thing, a portion is released, so they retain a certain amount which has to be covered by a retention guarantee. Is it clear?
Yes.
Right. So now these are three important guarantees what we issue, common guarantees. Then we are coming to the next one, financial guarantees and credit guarantee. This is a very common guarantee. Financial guarantee and credit guarantee are one and the same. That means, let us assume you come across a grocery shop, a person who is having a grocery shop, a gentleman, a merchant who is having a grocery shop in a closer to your residence. He is having a grocery shop. He buys frozen food from Elephant House, John Keels or Elephant House. He has been buying frozen food from Elephant House. So somewhere he is buying. So he wants to buy for, say, 5 million worth of frozen food every month. The turnover. He's having a mini supermarket, something like that. Then Elephant House insists on a bank guarantee, because they to supply the frozen food and other items, other products of Elephant House or John Keels. They are asking for a guarantee from a bank. So we are giving a guarantee to Elephant House. We say at the request of our customer so and so, we hereby confirm, we hereby give you an undertaking that we will pay you under 5 million in case if this customer fails to honor his commitment. So then, in other words, Elephant House is in possession of a correct certificate given by you. Elephant House is in a possession of a correct certificate but you have issued. So that they are holding the correct certificate. And they are, with that certificate, they are supplying frozen food and all those things. So this customer buys the frozen food, whatever the item, and then he sells it, then he settles their invoice. Like that it goes on. So they are in possession of a blank, check. The moment this customer fails to honor the commitment, then they will enforce the guarantee. This is the guarantee which is known as financial guarantee, or you can even call it a credit guarantee. Both are same. The operational aspect, the concept is same. Financial, you can issue financial guarantee and credit guarantee for a variety of organizations for them to give products in credit. Is it clear? So in this guarantee, there is no operational clause, there is no performance clause. Simply, we are issuing a guarantee. The moment they demand, we will pay. Is it clear? Is it clear?
Yes, right.
Then customs guarantee. Guarantee is what we issue to the Director General of Customs. I'll explain to you all. Then shipping guarantee. Then conditional guarantee. Then counter guarantee. Letter of undertaking. Now, in other words, these are the guarantees which we are issuing, which we bankers are issuing. So you should know the effective understanding of these guarantees, which I am going to explain to you all. I must tell you all, sometimes we may run short of time, but if you are interested, you can remain, because I am going to discuss question papers. I must also tell you all, sometime I might forget later. How many participants are here now? How many people are logged in?
67, sir.
62. Anyway, for your information, 51 will be the pass marks for this exam. 51. 65 is merit. 65 is merit. 81 is distinction. So if you get 51, you are through to the diploma. 65, you will pass with merit. 81, you will get distinction. So I just, in case if I forget later on, so this particular, all the sessions are very important. Right. Types of guarantees I have explained. Then tender bid bond. Tender bid bond is a guarantee a prospective tender is required to furnish at the time of submitting an application for a bid. This is obtained to ensure the payment of the guarantee amount in the event of that bidder tenderer withdraws from the offer and to cover any non-acceptance. I have already explained to you all. Bid bond, a bid bond, also known as tender bond guarantee, compensates the damages if the exporter contractor reverses the tender, refuses to sign the contract after the tender has been accepted. The bid bond is valid from the time of its submission and until its acceptance. Performance bond are generally issued in the construction field and are normally related to various types of contracts with the suppliers. This guarantee ensures the contractor performs and executes the contract within the stipulated time frame. It compensates the loss in the event of non-performance of the obligation or the obligations of the contract. It will be valid from the time of its issuance until its delivery or fulfillment of the performance. I have explained to you all. Retention advance payment guarantee provides an opportunity for the beneficiary to recover the advance payment and made under the contract if the contractor fails to fulfill their contractual obligation. In case of a failure to fulfill the obligation, the beneficiary could demand the advance payment made from the bank. Then financial guarantee, I explained. Financial guarantee is an obligation towards settlement of a financial transaction. This relates to an individual or bank when they undertake or promises to pay on demand an obligation of their constituent in terms of a credit transaction entered with a third party. Customs guarantee. These guarantees are issued when an importer requests for a temporary exemption of duty payable to the Director General of Customs. In certain instances, importers require to import raw materials to manufacture their products for re-export. No, they have to import raw material on condition they re-export the product. These raw materials are released without any duty on the strict condition the finished product will be re-exported by the manufacturer. These guarantees will become payable if the importer fails to adhere to the undertaking given. Customs guarantee. A customs guarantee is issued when an importer requests for a temporary extension. This will essentially cover the anticipated duty component towards expediting the clearance of goods. Shipping guarantee is an indemnity given by the consignee, the buyer, on which the bank jointly indemnifies the shipping line to take delivery of the consignment without the production of the original bill of lading. Requests for such guarantees are made in instances where the consignment arrives prior to the receipt of the original shipping document. Like the documents have come, before the documents could arrive, if the shipment has come, then the customer is interested to clear the goods. Then he will approach the bank for a shipping guarantee. Then conditional guarantee. Now, this is very interesting for you all. We bankers, I am asking you another question. We bankers, what do we issue? Are we issuing conditional guarantee or unconditional guarantee? Now, I have shared the little bit what you have learned now based on your experience. The guarantees what we bankers issue, are they conditional guarantee or unconditional guarantee? According to you?
Generally unconditional guarantees. No, sir?
Very, very good. All our guarantees are unconditional guarantees. All our guarantees generally are unconditional guarantee because we say payable on demand. We are giving various purposes we are giving, but ultimately it boils like what Shylock said. Look at your bond. Look at your bond. Custom beneficiary says, look at your bond. But Shylock's bond, of course, there was a loophole. What is the loophole? You can, without spilling any blood, he can't cut the, take 1 pound of flesh. So the customer may say, beneficiary say, look at your bond. So that's why all our guarantees are unconditional obligation. Unconditional, payable on demand. In other words, remember, your lips are sealed. Your lips are, you can't talk. Customer say, what is it to talk? You give a call to the beneficiary and say, no, this is regarding a guarantee claim. Yes, I got a guarantee claim. What do you want? There's nothing to talk. No? This is a demand guarantee. You are payable on demand. What is it you want to talk? Sometimes beneficiary means we are coming from such beneficiaries. They say, what is there to talk? There's nothing to talk. Don't waste my time. Because your lips are sealed. In other words, we are always issuing unconditional guarantee. Always, generally, all our guarantees are unconditional guarantee. We are putting payment, various uniform supply by them will be up to your specification, everything, but it's an unconditional guarantee. I am going to explain to you all what is conditional guarantee. Now, sometime back, some years back, when I conducted a similar session like this, the final day when I came home, one of my participants, a girl, gave me a call. And she asked me, sir, this, I want to get, I am one of your students, I want to get your advice on whether can I speak to you? I said, yes, what's the problem? Then she told me that, this is regarding, because she said her mother has to undergo a kidney transplant operation. She has to undergo a kidney transplant operation. So they have found a donor. He wants 5 lakhs. The donor wants 5 lakhs. So donor wants 5 lakhs. And they have found a donor. Then her concern was, she said, sir, now our problem is because this particular donor is not known to us. So the moment we have found the money also, everything is ready. But our worry is if we make this 500,000 after we give the money, if that man refuses to donate the kidney, how can we overcome this? So this is also something, a new case study for me. So then I also was talking to her and I said, have you found a donor? This is after my class final session. When I reached home, this girl gave me a call. So then I was also thinking, I was also breaking my head and to find out how can we help this thing. Then I asked her, where are you all going to do this operation? Then she said it will be at R3 Surgical. R3 Surgical. Then I told this girl, you can issue a conditional guarantee to this person who is donating the kidney. This is my own innovation. I said, you can issue a conditional guarantee to this person who is donating the, kidney. Then I asked, where are you working? She mentioned the name of a bank. So then I said, okay, you can ask your bank to issue where is the money? The money is, they have the money in fixed deposit. So you can ask, put the money in fixed deposit already there. Tell the bank to take that money, block that money and issue a conditional guarantee to favoring this gentleman, this person who is donating the kidney. What is the condition? I said, put the condition that we will pay 500,000 once R3 Surgical confirms the kidney has been, transplant operation has taken place, completed. Whether it's success or failure, it doesn't matter. Whether he has donated, it has taken place. So the condition what I imposed, I said, you R3 hospital, so once they do the operation, once the kidney is donated, they can give a letter, no, nothing prevents, R3 can. So I said, we will put that condition, R3. Then I told this lady, you can speak to your bank people, and I'm sure your bank will help. Then she said, I said, you speak to your bank people, and if they are not in a position to help, you come to my bank, we will give. I told this girl, you speak to your people, because since you are working in that bank, you speak to the people, and if they refuse to give, I will give a letter. I said, I will arrange for it, don't worry, I will give you a letter. I will get the letter from the bank where I am at. I had to explain to the people. So I said, because some people, as far as the bank is concerned, there is no risk. As far as that particular person who is donating the kidney is concerned, there is no risk for him. This lady is also no risk, because then they know the money they are giving, because money is there, money is safe. This thing. So then I told. Then she thanked me. I said, if you encounter any problem, you contact me. I will try to help. But she never contacted me. After that, I have not heard anything from her. But I am sure she would have done it. She would have done it. Is it clear to you all? So in case, if R3 hospital, once the operation takes place, this customer will have to get a letter from R3 hospital, not a customer, the beneficiary who donated the kidney, saying, R3 hospital will say, address the letter to the bank and say, we hereby confirm this kidney was transferred, the kidney was donated. Whether the operation is success or not is not the case, because they want protection to confirm that the kidney will be given, because the concern was, after taking the money, he can vanish, but they don't know the person. They don't know the person. Is it clear to you all? Is it clear to you all?
Yes, sir.
Any questions?
Yes, sir.
Right. So this is what is called conditional guarantee. This is what is called conditional guarantee. Exceptional circumstances, we are issuing conditional guarantee. Now, I can give you another good example. When we were at HNB, we issued conditional guarantee favoring Sri Lanka cricket. What's the condition? Because if I remember correctly, you know, the cricket also, when you say cricket, Sri Lanka cricket, you know, they are making billions of profit on each cricket series. Massive amounts are made, billions, more than the banks. So they are getting sponsorship and various things. So here they, some years back, they got a, what you call, sponsorship from Sony Corporation, Japan, Singapore or somewhere. And because they got that particular Sony Corporation, they got the exclusive coverage to televise a particular series. Exclusive coverage. Then we have to, what do you call, they have to pay some millions. So they put a condition. They put a condition there that this guarantee is conditional because they will pay the amount stipulated in the guarantee only on condition that the undernoted players play this series. And they have given the names of the Sri Lankan players. So they said, we have to confirm that these players will in fact take part in the series. Then only they are liable to pay the amount, some millions. So that guarantee, so we are the people who issued the HNB, we issued the guarantee because we got a counter guarantee from another bank in Singapore. So then we issued the guarantee favoring Sri Lanka cricket. So Sri Lanka cricket, after the conclusion of the series, so even that when the match was going on, I was also watching to see whether all these players are, so all were playing, all the players. So if in case if one player got injured, if he was not playing, they wouldn't have honored the claim. They wouldn't have honored the claim. Why? Because it was a conditional guarantee. So we then, thankfully, all the players listed participated, and then we got the claim from our counter guarantee from our principals from in Singapore. We got the matter is over. So there are two questions. Number one is, why did they insist on these players? Why are they worried about these players? Can you all tell me? But why did they impose that condition? These 11 players should play.
They may be the prominent players. Then only they can make the profit.
Yes, very good. Because the reason is, these are the prominent players, and suppose because Sony Corporation, they have got the live coverage. So in case if some of the prominent players drop, then you will not watch the TV. Their coverage will drop. Now, suppose if I am a great fan of Kumar Sangakkara, and if Kumar Sangakkara is not playing, sometime I may not watch the TV. I'll say, if Kumar Sangakkara, no, then no point in seeing. Then the coverage, like there may be so many others under that category who will not watch. So their coverage will drop. Their TV coverage will drop. They are expecting 100 million people to watch, say 25 million people to watch. And if some of the prominent players are not there, you know, the coverage drops. People will not be watching the match. That's why people are so interested. So supposing even if one person is injured, they are not liable to honor the claim. So in case if one or two players are injured, they are not liable to play pay the claim. So how will they overcome? Let us assume one or two players got injured. So we are watching the TV. They said, no, they are not playing because we are substituted. They are injured. They are unable to play. So the guarantee, they are not liable to honor the claim because the condition has not been fulfilled. How do you overcome that condition? Can you all tell me? How will they overcome that condition? How will they overcome that loss Now they have got a guarantee for some billions. Now because one or two players got injured, now they can't get the money. So in such an eventuality, how will Sri Lanka Telecom overcome that eventuality? You have got a guarantee. Now, suppose if anything could happen, no, they can fall sick, they could get injured. So how will they overcome that particular constraint? Can you all tell me? I think there are a lot of cricket fans here. How will they overcome that? So they can't by force and bring them and ask them to play. No, if they can't walk, if they are injured, it has happened in the past also. So how will they overcome? How can they overcome to face that eventuality? Any guesses?
They can put
They
a
have
condition.
not. Sorry?
They can put a condition.
No. What's the condition? Yes. You say. What is the condition in case if they are injured? That one. No, you are referring.
Injured.
What?
If they are in good condition, they will play. Something like
so that condition was not there. So they have simply said this. They have simply said they have to play. They have to play. So it was necessary. Otherwise, if they don't play, the Sony Corporation investing so much millions of rupees, then it will be waste because nobody watching their coverage. They are losing. So how do they overcome? Any other guesses?
So they can mention the substitutes names as well?
No substitute name was mentioned. If you mention substitute name, they will not come to sponsor it. They will not come to sponsor it. Because nobody is watching. Now, for instance, I don't know how many of you are watching the current series. There are some cricket matches. It's not very much in the news, neither. Not very much in the news, unlike those days. Not very much in the news. Why? Because some of the players are not very well-known players. So therefore, the coverage has dropped. So there is a mechanism, avenue to overcome this loss. I will see whether you are in a position to give answer. That is covered by insurance. That is covered by such an eventuality is covered by insurance. They are taking insurance. Sri Lanka Telecom. Because otherwise 100 million they are giving if the players are injured. So that is covered by insurance. Even when they have cricket matches, they are expecting about 30,000 people to come. And if they don't come and they are expecting about 35 or 40 million to this thing. So if they don't come, then what do you call this? They can claim from the insurer. So to overcome that eventuality, they are dependent on an insurance. Is it clear to you all? The insurance also, it is a risk. So they will insist on substantial premium. So if the match was, concluded according to the terms, the money paid to insurer as premium is a profit for them. Is it clear to you all? Is it clear? Conditional guarantee? Is it clear? Is it clear? What is conditional guarantee? Remember, yes. Remember these two cases, but we are not issuing conditional guarantees. Remember, all your guarantees are unconditional guarantee. We never issue conditional guarantee. These are exceptional circumstances. Sri Lanka, in my banking career, I have come across only this and this other, the particular, my student, when she told me, so I also gave a solution. So these are two instances, but all your guarantees are unconditional guarantee. That's why we say we be payable on demand without any contestation. Then counter guarantee. Counter guarantee is a payment arrangement used in international trade which involves two bank-to-bank demand guarantees involving two different banks. This is used in situations where the bank providing the guarantee is in a different country of the beneficiary. The bank from the country of origin instructs the second bank on behalf of its client to issue a demand guarantee in favor of the beneficiary in that country. It guarantees, this is defined as counter guarantee, the second bank that will pay immediately on demand if a claim is made by the beneficiary, which in turn will be settled and claimed by the local bank. So this is what, if there are two banks involved, Then now in this case also, now this particular Sri Lanka cricket case, if you take that as an example, we have issued the guarantee based on a counter guarantee issued by a bank in Singapore. Now, Sony Corporation is not our customer, but all guarantees locally issued, whatever guarantee you are issuing, whatever guarantee they are getting, it has to be from a local bank. No beneficiary will accept a foreign bank guarantee. Can you all tell me why? Whenever you are issuing guarantees here, all beneficiaries will insist only a guarantee from a local bank. Why is that? Can you all tell me?
When we are disposing the funds, it's taking out of Sri Lanka, so there may be any restrictions.
Not that. The main reason is because if the guarantee is issued from a local bank, by a local bank, it is easy for them to get the money, claim. Payable on demand, no. So if a guarantee issued by a local bank, they can easily make the claim from the local bank and the subject is closed. But if they are getting a guarantee direct from a foreign bank, it is very difficult for them to claim. And sometimes the foreign bank may reject the claim or they may delay the claim. So to avoid that, all the guarantees are issued or they insist the guarantee should be given by a local bank. Now even here in this case, Sri Lanka Cricket, the guarantee was issued by a local bank. They wanted from a local bank, but this local bank was absolutely, there is no risk for them because they got a counter guarantee from a bank in Singapore. So no, Sony Corporation is not our customer. But Sony Corporation's bankers in Singapore, they have issued a guarantee which is called counter guarantee. So counter guarantee is a payment arrangement used in international trade which involves two back-to-back demand guarantees involving two different banks. This is used in situations where the bank providing the guarantee is in a different country of the beneficiary. The bank from the country of origin instruct the second bank on behalf of the client to issue a demand guarantee in favor of the beneficiary of that country. It guarantees, this is defined as counter guarantee, the second bank that will pay immediately on demand if a claim is made by the beneficiary, which in turn will be settled and claimed by the local bank. Similarly, if one of our customers wants to participate in a tender in Singapore, we also can issue a guarantee to a bank in Singapore so that our customer can participate in a tender in Singapore, because Singapore, to participate in a guarantee in a tender in Singapore, they will not accept a guarantee from a local bank. It has to from Sri Lanka. It has to be from a bank in their country. So what we can issue a counter guarantee. That is what is called counter guarantee. Is it clear? Is it clear? Any questions? Right. So now, difference between a conditional and unconditional guarantee, I have explained to you all. Now, what is letter of undertaking? Now, see, letter of undertaking, when you say letter of undertaking, now we always say bank guarantee. Now, this is a very exceptional case which you may come across. For instance, let us assume Port City, the new Port City project, I think the work is going on. A lot of banks are interested in opening branches there. Take for instance, a lot of banks are interested in opening a branch here because it's going to be a commercial center. So to open the to open a bank branch there, the commission, there's a special commission. They say if bank wants to open a bank branch here, they have to provide with the tender or with the particular this thing, they have to provide a bank guarantee. They have to provide a bank guarantee. So in such an instant, let us assume if it is HNB, if HNB wants to open a branch there, and they are saying according to the terms, they are saying that HNB has to give a bank guarantee. Can HNB give a guarantee? Yes or no? Can HNB give a guarantee for themselves? Can I give a guarantee for my loan?
No, sir.
No. So HNB now, because we are coming across such situation, that's why I have put that here. So if HNB wants to open a branch there, they are saying, according to the contract agreement, they say it has covered by a bank guarantee. Because I came across a case when I was in HNB, where they have a particular this thing. So then we said, so how can we give a guarantee and we can't give a guarantee? We can't guarantee ourselves. At the same time, we can't go and ask another bank to issue a guarantee on our behalf. That will tarnish our image. Why should we go and ask another bank to give a guarantee on our behalf? Neither. Can you ask another bank to give a guarantee for HNB? No. So to avoid that, what we said was, I spoke to the particular beneficiaries. I don't want to give details. I argued with them and I said, no, according to this thing, you are asking for a bank guarantee. I said, now we want to participate. So how can we issue a guarantee? He said, no, you can issue. I said, no, we can't issue a guarantee. How can we say we HNB ourselves hereby guarantee for ourselves? We can't issue a guarantee for ourselves. Then I said, we can't go and ask for a guarantee from another bank also. That is also unethical. We can't. How can we go and ask them to issue a guarantee when we are solid, when we are strong? Then I said, we will give you a letter of undertaking incorporating all the clauses and terms. What you want is, you want confirmation that we'll pay on demand. So I suggested we'll issue a letter of undertaking, then they have to refer to their legal people, the beneficiary. They accepted it. They accepted my argument. So we issued a letter of undertaking. That's why I'm just giving this as an example, because you may come across situation like this. So a letter of undertaking is a form of guarantee issued by a beneficiary, issued by a banking entity to a beneficiary on behalf of the bank, giving an assurance of payment in case of an eventuality. This is equivalent to a guarantee, as a bank will not issue a guarantee on its behalf, as it is unethical. If the bank wants to enter into a contract with an organization which requests for a bank guarantee, in terms of their proposed contract, the bank would issue a letter of undertaking instead of a guarantee. The obligation, however, is one and the same. Is it clear? Right. So assigned guarantee. What is assigned guarantee? Usually a bank guarantee is a direct guarantee between the contract partners in which the bank issues the guarantee direct to the beneficiary. However, in the international trade, the guarantees are issued to a foreign party through the correspondent bank against a counter guarantee or an assigned guarantee. In certain countries, according to their legislation and currency regulations, they are debarred from accepting a direct guarantee from a foreign bank in certain countries. But in our country, there is no bar. We can accept it, but the beneficiaries will not accept it. There is no bar. Foreign bank can issue a guarantee, but the principal, the beneficiaries, a prudent beneficiary will not accept a guarantee from a foreign bank. Now, sometimes people used to ask me, we have got a bank guarantee from a foreign bank, can we accept it? Some other people. I said no. Some beneficiaries, people. I said no, don't accept a foreign guarantee. Tell them to come through a local bank, because in case of a demand claim, you should go to the bank and claim the money. So all guarantees should be routed through a local bank. Then syndication, combined guarantee. What do you mean by? In instances where the sum involved is fairly large, prudent banks will want to share such risk with various other banks. In such an eventuality, they may obtain a counter guarantee from a variety of banks and issue as a single guarantee. Now, if you are getting a guarantee request for a 5 billion, commission is very high. You can earn millions, but at the same time, some big banks, they will always want to share that. They'll say, no, we will issue 1 billion. So you can go to, say they'll make arrangements to issue guarantees, give counter guarantee from different banks. In the sense, or we can issue the guarantee, provided we get a counter guarantee from 5 different banks in that foreign country. So it will be 2 billion guarantee. We don't want the counter guarantee from one particular bank, but we may sometimes insist on 5. That is depending on that bank's, that foreign bank's credit worthiness. They are rating everything, you have to check. So if you are satisfied with it, you don't have to worry. Your management, they will confirm to you the acceptability of it. Then we can issue these. In such an eventuality, they may obtain a counter guarantee from a variety of banks and issue a single guarantee. This arrangement minimizes the risk, will minimize their risk. Then security for a bank guarantee. Under normal circumstances, the bank decides to issue guarantees against readily marketable securities, that is cash, shares, debentures. However, under exceptional circumstances, various other forms of securities are also considered. The most important security in a bank guarantee is the integrity and business reputation of the prospective applicant, in addition to the experience, competence, and past performance. The banks may issue guarantee in high-risk security situation, provided such guarantees are covered by 100% cash security. What is this high-risk security? I can give you a good example. We came across a situation, one person who was not our customer, he has come on a holiday to Sri Lanka. He has gone to one of the clubs in Colombo, and after a heavy drink, he had an argument with somebody. And things went out of control. Not our customer. The hotel authorities have informed the Kolpiti police. Police have come and taken this man and remanded him. He has come on a 2 weeks holiday to Sri Lanka, so he has gone to some years back. Police have remanded him. Then he was produced before a magistrate and his passport was impounded. This man came on a holiday for 2 weeks. Passport was impounded and the case was postponed. Then he has put a motion through his lawyers. Then the court issued an order. He has asked for the passport to be released so that he can go to London, because he has said that I will go and I will come back for the case. I will come back definitely. So without the passport, he can't go. So courts have ordered to impound the passport. Now this gentleman has come on a 2 weeks holiday. He can't go. He couldn't go. So then through his lawyers, he made a request to the courts to release the passport, temporarily release the passport. And the lawyer, he gave assurance that I will come. But the judge said, okay, passport could be released, provided he gives a bank guarantee of 1 million. Provided he gives a bank guarantee. So the order was given by the courts, magistrate courts. We will release the passport, could be released, provided he issues a bank guarantee for 1 million. That means if he doesn't come on January 14th, the next hearing, bank has to pay 1 million. Then what happened? He came to our bank, he came to me. I don't know this customer. He came through one of our highly valued constituent. One of our valued constituent of our bank, his friend. So that gentleman only came in, can give a guarantee for 1 million. And then this gentleman told me, our customer says, sir, I have an NRC deposit, you can block my NRC deposit and give a guarantee to the magistrate court. So we issued a guarantee. It's a high risk. What did we say in the guarantee? We said the request of Mr. So-and-so, we hereby confirm that he will present himself on 14th January 19, the date, when the case is taken up, he will present himself. In case if he fails to present himself, we will pay 1 million. So I was not bothered. I didn't dare ask it. I was not bothered to see whether this man is here or whether he has gone back, whether he will come. Why? Because I have got 100% cash. I have blocked that other person's money and issue the guarantee. So this is what is called, the banks may issue guarantee in high risk situation, provided such guarantees are covered by 100% cash security subject to its credit policy. So you may put the reason, but ultimately, like Shylock said, look at your bond. Then types of security for bank guarantee generally accepted by the banks: third-party guarantees, counter guarantee, cash margin, cash build-up, fixed deposit, savings, marketable shares, surrender value of life insurance policies. Marketable shares, surrender value life insurance policy, assignment over the underlying contracts, mortgage over immovable property, movable properties. However, this is obtained only in cases where the bank establishes a revolving limit to its best and valued constituent guarantees. Valued constituent guarantees will be issued under this limit. I mean, certain customers, big customers, high net worth customers, we may have established a limit for them against mortgage of immovable or movable, and again that security we could establish a limit and issue them guarantees. So other than that, we take third-party guarantees, cash margin or marketable shares, surrender value like that. Then security for bank guarantee, I explained to you all. Security constraint: if the bank is fully satisfied of its customers' ability to fulfill the obligation, bank may entertain a request for a guarantee against the security of a simple indemnity from its customer. However, under exceptional circumstances, If the bank has any reservation of its customers' ability to fulfill the contractual obligation, which is considered high risk, banks may consider such requests, provided such requests are fully secured by 100% cash margin subject to the stipulation of the bank's credit policy. So high risk security, high risk cases, 100% cash margin. That's why I explained to you all the court case where this gentleman has to go. It's a unique case. You know, while we are working in our bank, in our University of Banking, we are coming across a lot of cases like this. Daily, it's a process of learning. So there are a lot of cases we are coming across, which I am happy to share with you all. 100% cash margin subject to the stipulation of the bank's credit policy. You have to go through your bank's credit policy. Then important operational aspects of a bank guarantee. Now we are coming to the operational aspects of a bank guarantee. What are the operational aspects? Number one is format of the guarantee. All guarantees should be issued in accordance with the bank's approved formation. Any deviation of the format to comply with the specific requirements of the beneficiary should have the approval of the bank's legal division. Certain repeated beneficiaries will have their own format and expect the guarantees to be issued in such formats. Hence, such instances should have the concurrence of the bank's legal division, because you know there may be loopholes. Like the Shylock's case, he has left a loophole. As a result of that, he couldn't claim. He couldn't get what he wanted. He wanted 1 pound of flesh. He couldn't get because there was a loophole. Similarly, in our guarantees also, you have to ensure that you cover all your loopholes. And if you are deviating from the approved format, always get the legal division's approval. Or before you place your signature, always get the legal division's approval if you are deviating. You can deviate, but provided you get the approval from your legal department, format of the guarantee. Then wordings of a guarantee, there are no standard local international regulations to word guarantee. Hence, it would be worded freely at the discretion of the issuing bank depending on individual requirement. However, it should indicate the purpose for which it is issued, expiry, and the conditions under which a claim could be made. You all are there, no? You all are there?
Yes.
Yes, I didn't hear any voice. That's why I was asking. I was wondering. Well, screen is visible, no? Screen is visible.
Yes.
Yes, sir.
Yes, sir.
Yes, because I am addressing an empty blank wall. I am happy from today onwards, government has relaxed. Hopefully we'll be able to conduct physical sessions very soon, because here in this room there are no one, only I am here. So that's what I asked, because otherwise I'll be just lecturing a blank wall. So you can see that. Very good. So careful scrutinization of the guarantee format. Scrutinization of the guarantee format is very, very important. Don't just place the signature. Don't just place a signature, even if you are in a hurry. Check it very carefully, word to word. Every full stop, comma have to be checked. Remember this Shylock's loophole. That's why I put that loophole, that particular episode, to draw my point. Check it very carefully. My God, how many times I used to check the guarantee. What I used to do is, when a guarantee is prepared, I don't get the people who prepare the guarantee to read. I get a different staff member to come and read the guarantee one by one to me. I also check. I normally don't get the people who have prepared the guarantee. Once the guarantee is prepared, we need to put for signature, because I was a major signatory. What I do is I check it very carefully. Then again I call somebody else, a different person. The reason is not because I don't trust them. If that person has missed something, he will miss the same thing again. So you must always get a different person to read it, because supposing the originator, you get the originator to read it, he may miss it. You know, genuinely he may miss it. So always better for you to get a different person to read the guarantee, because you place a signature. Because I have come across a lot of cases, billions of guarantees I have signed, but I have never allowed bank to incur any loss, which I am proud to say. So you have to be very careful, because we had a very talented and committed team. I was blessed with a talented and committed team wherever I worked. So guarantee formats, all guarantees should be issued in accordance with the bank's approved format. Any deviation should have the approval of the bank's legal department. Certain repeated beneficiaries may have their own format, hence may compel the banks to issue accordingly. Wordings of a guarantee, I have explained to you all. Important aspects of a bank guarantee. These are the important aspects in a bank guarantee. There may be a question sometimes. What are the important aspects in a bank guarantee? The name of the applicant, name of the beneficiary, short description of the underlying transaction, maximum amount payable and the currency in which it is payable, terms and conditions for claiming the payment in, you have to put that, date of expiry, very important, date of expiry, mailing time, if any. Now that is, if you are getting a counter guarantee from a foreign bank, in addition to the date of expiry, we want an additional period of 1 month as mailing time, because if the guarantee is expiring on 31st of January, we must have time to claim it from our the bank which has issued the counter guarantee. That's why we call it a mailing time. Applicable law, remember, all guarantees are subject to Sri Lankan laws. If a bank in Singapore issues a guarantee, counter guarantee to us and say this guarantee is subject to Singaporean laws, we can't accept it. They have to amend it. They have to amend it and say this is subject to Sri Lankan laws. Now in one, I can remember when we were at HMV, there was a guarantee. We got it from Barclays Bank, London, favoring Ceylon Petroleum Corporation. Because they have issued a guarantee favoring an airline. That particular airline was, they had got in some agreement and they have inaugural flight was due. And they got a guarantee. They have said this guarantee is subject to British laws. So we told them you had to amend it to say subject to Sri Lankan law, which they refused. Then we said we can't accept it. And then finally one gentleman from that bank gave me a call and said the plane is due to land next Friday. And if you all don't issue the guarantee, then the plane will not be able to land. So I said, no, you have to amend it. We can't issue a guarantee subject to the British laws. So you have to amend it to Sri Lankan law. So later they amended it. So it should be applicable to Sri Lankan law. Supposing if we ask Barclays to issue a guarantee, we have to tell Barclays Bank this guarantee is subject to British laws, UK. We can't say Sri Lankan laws there. So its applicable jurisdiction is the country in which the guarantee becomes operational. Format of the guarantee should be approved by the applicant and should be in accordance with the specification of the beneficiary. It's better for you to get the approval of the format from the applicant also. Prior to the issuance of the guarantee, prior to you place the signature, because I have come across thousands and thousands of cases like this. So prior to the issuance, prior to you put your signature, check it very carefully. Important aspect of bank guarantee. Then important liability clauses of a bank guarantee. What are the liability clauses? Irrevocable and unconditional. Payable on first demand without contestation, demur or protest. Without reference to the principal in case of a claim, notwithstanding any disputes between the parties, treating any demand made on the bank as final and conclusive. In other words, all these will boil down to one aspect: your lips are sealed. Your lips are sealed. Remember, your lips are sealed. Then, important liability clause of bank guarantee: irrevocable, unconditional, without reference to the principal, payable on first demand, notwithstanding with any disputes between the concerned party, without contestation, demur or protest, treating any demand made on the bank as final and conclusive. Amendment and extension of a bank guarantee after issuance. Remember, you can't amend or extend the guarantee after its issuance without the concurrence of the concurrence of the customer, your customer, not the beneficiary. You have to get the authorization of your customer to amend. Suppose in the Sri Lanka Telecom asks you to extend the guarantee, you can't do it without your customer's concurrence. If they want to alter another term after issuance, you have to get the concurrence from your customer. Amending the guarantee, amendments to guarantee cannot be made at the request of the beneficiary. However, if such a request is approved by the principal, the customer banks could comply with such request. Now, settlement of a claim. When you get a claim from a bank, then only your heart beats fast. I have come across several instances like this. When you get a claim, we put our hands up. First thing, we have to check the guarantee. So settlement of a claim is that is the most difficult situation. Difficult when you demand. We hereby demand. The words what the beneficiary uses will give you a heart attack. In terms of the guarantee, in terms of your obligation, we hereby demand you have to pay 10 million. So settlement of a guarantee, claim, very important. When your claim procedure should be made within the expiry, you can't. If the claim has come after the expiry, you can't. If the guarantee, now I could remember when we issued a guarantee, there was a guarantee, I think it was 1 million or something. We issued the guarantee. We issued a guarantee on a counter guarantee from a foreign bank. The foreign bank has made a typographical error. And the claim was made after the expiry, which we rejected it. Then they said they have made a typographical error. I said, no, we can't. We can't go by. We have to go by the original guarantee, counter guarantee, what you have given us. So if the expiry means expired. If it has guarantee is expiring on 30th of January, expired. 31st morning, if they come and ask you to pay the claim, you can't. Expire means expired. Should be made within the expiry. Any claim made after the expiry should not be entertained and should be rejected. All claims should be expeditiously settled after ascertaining its validity. In certain Middle Eastern countries, expiry dates are not enforceable. Some other Middle Eastern countries, especially Syria, expiry dates are not enforceable. So therefore, if we are issuing a guarantee to a party in Syria through our correspondents in Syria, we have to wait till they confirm the cancellation of the guarantee, because we can't cancel it after expiry. That's only in Middle Eastern countries, not other countries. Then extension of pay clause I explained to you all. Any claim made by the beneficiary should be expeditiously settled, and there should be no hesitation on the part of the bank in honoring a valid claim. Claim procedure, all claims should be made within the expiry date. Any claim made after the expiry should be rejected and not entertained. All valid claims made within the expiry should be expeditiously settled. There shouldn't be any hesitation on the part of the bank in honoring a valid claim. Cancellation of the guarantee should be cancelled after expiry. Any premature cancellation should have the concurrence of the beneficiary. You can't cancel the guarantee before the expiry without the concurrence of the beneficiary. Even after the expiry, it is preferable to wait for a further period of 1 month for cancellation to avoid any dispute. Beneficiary cannot unilaterally make a request for an extension unless such extensions are authorized by the applicant. The bank is not under obligation to remind the beneficiary of the expiry of a guarantee. I have explained this already. Cancellation of a guarantee should be cancelled after expiry. Any premature cancellation should have the concurrence of the beneficiary. Even after expiry, it is advisable to wait for a period of 1 month if the original guarantee is not received. Beneficiary cannot make any request for an extension unless such extensions are approved by the principal. Expiry of a guarantee. Once a guarantee is issued, it will remain in force unless the beneficiary releases. Only the beneficiary has the power to cancel the guarantee during its validity. No other person has a right to cancel the guarantee during its validity. Release of principal from the obligation. If no claims are received within the expiry, even though the obligation of the bank is fully extinguished, we should be cautious in releasing the principal from the obligation. In certain countries, especially in the Middle Eastern region, the expiry dates are not enforceable. I explained in certain Middle Eastern countries. Who can stop the bank from honoring a claim? Can you all tell me? No one has the authority to stop the bank from honoring its claim if a claim is made within the expiry. However, if there is a dispute, only a court injunction could restrain the bank from honoring its claim. Most often, attempts by the principal to obtain such an injunction or restraining orders are refused by the courts. In exceptional circumstances such as fraud, the courts do intervene with an injunction or restraining order. However, if a bank purposely delays settlement of a claim in anticipation of an injunction being served, it could result in action being filed by the beneficiary for damages. That means you can't tell the customer, why don't you go and get a court injunction? That is not your job. So if the beneficiary comes to know, he can even sue the bank and say that you are the person who has advised the customer to get a court injunction. That is not your job. Your job is the bond. He will say, beneficiary will say, look at my bond, like Shylock's own words. Look at my bonds. So when you are issuing bonds, don't ensure that there are no loopholes. Then only a court of law could stop the bank from honoring a claim. Then mala fide, fraudulent claim. Prudent bankers will examine the integrity of not only the applicant on whose behalf the guarantee is issued, They will in addition examine the integrity of the beneficiary. If this additional precaution is not taken, there could always be a possibility of a bona fide fraudulent claim, which the bank will not be in a position to resist in terms of its obligation and commitment under the guarantee. In other words, a bank guarantee is a blank check. There are instances bank guarantees issued being used for certain fraudulent transaction and not for the real purpose for which such guarantees were issued. There's no time to explain that. So in brief, what I want to tell you, prudent bankers will also want to examine the integrity of the beneficiary to see that he doesn't just make any ad hoc claims. He doesn't make any ad hoc claims. He doesn't make any fraudulent claims. So even if he makes a fraudulent claim, we can't do anything. We can't avoid that. But prudent bankers will also want to see. But generally, bank beneficiary, if sometimes your customer also may say, why are you interested? I am giving you the money. I am giving you this thing. But sometimes prudent bankers will also want to ensure all the claims which are made are genuine, even though you have committed. So any questions on that? Any questions? Now we have come to the end of the session. Can I move to the next one? Now I am going to take you all to the questions. Now, can you all see this slide? Can you all see?
Yes, I can. Yes, I can.
Yes. I'll just have water. Now, there are 40 questions here, right? There are 40 questions. I must tell you all, in these 40 questions, the 10 questions which forms section A and section B is also hidden here. So see how lucky you are. The 10 questions which forms, or all the questions are hidden here. So that's the reason why I am going to now take this question one by one. So you can, I'm not going to ask anyone that, so I'll just ask. You can make a note of it and keep it as a guideline, not only for your exam, even for your proper, while you execute your responsibility, you can keep it as a guideline. Number one, I'll go like rapid fire. I'm going to go fast. This is some of the rapid fire question. What is the duration of a title examination towards acceptance of an immovable property? Who can answer it?
25
Sorry?
days.
Right, very good. Excellent. What is the validity period of a fixed mortgage?
Until the settlement of the loan.
Until the, right, and until, no, fixed, what is the validity period? Yes, very good, very good. Very good. Very good.
Validity.
Yes, no, it's correct. Until the settlement of the loan. Until settlement of the loan, huh? Until settlement of the loan. What is the answer? Yeah,
Yes.
Right, very good. Movable asset is, the answers, can you just raise your voice so that others also can hear? Movable asset is considered as high risk security. What is the most important criteria which is to be ensured towards acceptance of this security? Movable asset.
Insurance and valuation.
Movable means movable asset. That means stocks.
Availability of
Stocks.
Inspection.
Availability of
stocks.
Yes, that's right. You have to ensure the availability of the stocks. Then inspection, we have to get the insurance, periodical inspections. Then you have to get the monthly stock statement. Now the valuation and this thing will come for the movable. But here we don't get the valuation. We have to ensure the availability of the stocks, periodical inspection, stock statement, and insurance. If a title to an insurance policy, if a title to an immovable property is not recommended by the branch lawyer, legal officer, what is the next option available towards considering its acceptance?
Title insurance.
Very good. What is defined as insurable value of an immovable property? What is defined as an insurable value of an immovable property?
The value of the
Value of the
property.
building, sir.
Value of the building. Value of the building. Value of the building. Others, if you have, you can correct your answers if you all have made any mistakes. Value of the building. What is defined as the insurable value of an immobile property? Value of the building. Define the three values stipulated by a valuer in an immobile property.
Market value, for sale value, and insurance value.
Very good. What is the validity period of a floating mortgage?
Until the cancellation of the mortgage contract.
Excellent. What is your understanding of a parity action? Explaining brief.
Acquiring the property without referring to courts.
Right, very good.
It's above 5 million. The original amount should be above 5 million.
Very excellent answers. Movable asset is a very weak security. However, what are the most important follow-up action which have to be adhered to towards ensuring the availability of such security? I think same thing. But sorry, can you tell me?
Frequent inspection, visit.
Sorry.
Frequent inspection and visit.
Frequent inspection. You have to call for the regular monthly stock statement, and the insurance also one of the condition. Frequent inspection, regular stock statement is a must. How do you define an immobile machinery?
Not fixed to the ground.
It's mounted to the floor in a manner which unable to move.
That's right. Very good. Fixed to the ground. It's immersed on a concrete layer. Is it clear? Right.
Yes, sir.
When an immobile property is obtained as security, what is the amount to be obtained as the insurance cover over the asset pledged as security? When an immobile property is obtained as security, what is the amount to be obtained as the insurance cover over the asset pledged as security?
Insurable.
Yes, insurable. When an immobile property is obtained as security, what is the amount to be obtained as insurance cover over the asset? Insurable value. That is the value covering the building. Clear? Is it clear?
Yes.
Yes. Define the important precautions to be adhered to when an insurance cover is obtained to cover the assets pledged as security. Define the important precautions to be adhered to when an insurance cover is obtained to cover an asset as security. What are the important stipulations?
It has to be assigned to the bank.
Sorry? Right. Very good.
It has to be assigned.
Yeah. Can you speak a bit louder, miss, for the benefit of others? Yes.
It has to be assigned to the bank.
Right. Very good. What is the other one?
We have to do periodical inspection and see whether that particular value of
no, I am talking about insurance. Here I am on the subject of insurance. Sorry?
Risk location.
No, insurance, there are two things to be defined. The important.
It should be cover the value.
Define the precautions to be taken. No, I am using the word is define the precautions to be adhered to when an insurance cover is obtained to cover the asset as pledged. You are taking insurance. You are giving the loan. You are taking the insurance. So what is sorry?
Availability of stock.
No.
So full value is covered.
No, here I am using a general term. I am not referring to immobile property. I'm just telling define the important precautions to be adhered to when an insurance cover is obtained to cover the asset pledged as security. You are taking the security. You are granted the loan. Now you follow up. What are the follow up? Number one.
It's we have to monitor.
Monitor. Yes.
Monitor the renewal of the insurance.
Very good. Excellent. Monitor the renewal. Excellent. You have to monitor. That is follow up. If the policy has expired, no cover. Number one is you have to ensure policy assigned. You have to follow up the renewals. You have to ensure the policy is renewed. I know in some of the banks this is not happening. Some of the banks. So you have to ensure that the policy is renewed on the due date. That is very important. Excellent. That is very renewal is very important. What is the difference between a sum assured and a surrender value of an insurance policy? Explain in brief.
Sum assured is the value, the face value of the life policy.
Right.
And surrender value is the amount which the bank can be claimed.
Right. Very good. In case of eventuality, how much the amount that is paid. Right. So what is right. So now what is insurable value? What three values? What is the value period of what is your understanding of erratics? Movable asset is a weak security.
Section 15.
Sorry, 15.
Section number 15.
Define the ingredients in determining the good quality of a security. It is in your handout. Define the ingredients in determining the good quality of a security.
It should be converted into liquid asset. Money easily.
Disposable.
Yes, right. Very good.
So, value is appreciating.
Right.
Title is clear and
right. Very good. Excellent. The answers what you gave are excellent. Identify the three ways in which the banks and financial institutions create charges over an asset.
Lien, pledge, and mortgage.
Yeah, lien, pledge, and mortgage. Very good. Then third-party mortgages are discouraged to avoid any legal complications. However, if you come across an instance where a third-party mortgage is offered as security, what precaution you will take to avoid the concept of a third-party mortgage, thereby strengthening the security to face any eventuality?
Property owner can be joint can grant the facility jointly.
Right. Very good. Excellent. You will make the property owner a co-borrower to avoid the third party. I'm not saying you can't take third-party mortgages. You can take it. There are some people, if there are no other way, you have to take it. But our preference is to avoid third-party mortgages. If we come across such instances, it's always advantage. It is benefit to the bank to make that co-owner of the property a joint borrower, so that in case of a eventuality or parity action, we have no problem because it is not a third-party mortgage. All assets on which charges are created have to be registered within the relevant authorities within the stipulated time period. State the duration within which the mortgage created over movable asset is to be registered.
21 days.
Very good. 21 days. Excellent. Banks and financial institutions have been authorized to accept various types of security. Define the security which is considered as first class and strong securities other than cash, which will ensure the safety of the exposure.
Immobile.
Sorry?
Immobile property.
Immobile property. Excellent. Immobile property. That's a first class security. Immobile. Movable asset is a weak security. However, banks and financial institutions do take such security due to the competitive environment which prevails in the financial industry. Define the risk faced by the lending institution in accepting such security.
Movable asset can be removed.
Very good. Excellent. The movable assets could be removed. That's a major risk we are having. Excellent. So, name three types of guarantees generally issued by the banks and financial institutions which we discussed today. Three types of guarantee.
Tender guarantee, performance guarantee, and advance payment guarantee.
Excellent. What is your understanding of a conditional bank guarantee today we discussed?
Guarantees are issued with certain conditions.
Right. Excellent. Identify three important and mandatory clauses which have to be incorporated in a bank letter of guarantee. Number one is expiry. Very important. Expiry is very important. Then number two, name of the beneficiary. Name of the
value amount, sir?
Yes, and the other one is the amount. There are so many things. You can select three. Expiry is very important. When a claim is made by the beneficiary on a bank guarantee, state the period within which such claim should be settled by the bank financial institution.
Immediately.
Immediately. Very good. Payable on demand immediately. Your lips are sealed. Explain your understanding of a concurrent mortgage.
Mortgage, the property is mortgaged to two banks, and right. Both banks have the same rights over the property.
Right. Excellent. Excellent. What is the deed of postponement?
So when a property is mortgage leased out to a party, if bank obtain a mortgage over that, the lessee should sign a document confirming that they are well aware of the mortgage.
Right, and they are well aware, and the bank's mortgage will take priority in case of a eventuality. Very good, excellent. What is the important follow-up action? When quoted company shares, debentures are accepted as security towards ensuring the availability of margin in safeguarding our exposure.
Let's check the market shares.
Right. You have to monitor the fluctuation of the value of the shares. When you are taking shares as security, I explained, you have to monitor now. Here, I must tell you all are very lucky because everything is recorded. Sometime back when bank invited me to conduct a session, they gave me a call and asked me, sir, tomorrow's session, can we record? Can you video the entire, this thing we want to video it? Can you? I said, no, I told them, I am very sorry. You can record it, but no video. I don't, because then what will happen is they will record everything and they will keep on playing that. But now you see everything is here. So you are very lucky. Everything is here with you all. You can go through this recording even 1,000 times or 100 times. Everything is there. So what is the important follow-up action when quoted company shares, debentures are accepted as security towards, you have to monitor the fluctuation of the shares. Then personal guarantee is a weak security. However, what are the precautions you will take towards the acceptance of such a guarantee in case of an eventuality?
Set up.
Sorry?
Set up. Individual set up.
Yes. Sorry, miss, I couldn't hear that.
Set up.
Yeah, letter set up. Letter set up. Letter set up. You are referring to set up. Yes, set up is already incorporated in the personal guarantee bond. Set up is incorporated. As I showed you all, set up is incorporated. I think some banks guarantee bond you have to check and see whether it is there. But if it is not there, you can't ask the guarantor to give a letter set up. He may not give. That's why we have incorporated. We have slowly we have smuggled that clause in the guarantee bond. Am I correct? We have slowly they have smuggled that clause in the guarantee bond. If you ask the guarantor to sign letter set up, he will not sign. But the most important precaution what we have to see is the credit worthiness of the guarantor. So what are the assets he has? You have to go through his guarantor statement and say whether he has, what are the assets here. If the person has no assets, there's no point in getting his guarantee. So you have to see the credit worthiness, the assets of that particular guarantor. What is burglary policy on first loss basis? Is it clear, Miss Guarantee? Clear?
Yes, sir.
Right. What is burglary policy on first loss basis? First loss basis?
It's covered.
The value, only the value is paid, the amount that can be steal is not the total value, sir. So the cover is given only for the
right. That's right. Any loss in case of a theft, burglary or theft occurring at the very first instance, they may have 100 million worth of facility, 100 million worth of stocks, which they are insured against fire. But out of the 100 million, they have said 5 lakhs. We face a risk of that being burgled. And somebody said, when I was discussing, somebody said, they can come and take the at the point of a revolver, they can remove the cash. That also could occur at the very first instance. Similar to that, people coming for, when they go to the fit-on room, they can remove some garments, they can take some perfume, put it there. So those are all vulnerable items which they may lose in case of a theft without their knowledge. That can happen only once. Second day, it can't happen. In spite of all their security, these are vulnerable areas where some customers could come and remove without their knowledge. So therefore, that's why they may have insured against first loss basis. If a limited liability company, is it clear? Is it clear? Is it clear to you all? First loss?
Yes.
If a limited liability concern enjoys banking facility with your bank, decides to change the name of your company, name of their company, what is a document you will insist towards ensuring the accuracy of your existing documentation? If a limited liability company has taken facilities from your bank, they are granted them millions of rupees worth of facilities, and after granting the facilities, all of a sudden they decide to change the name. Change the name of their company. The label they are changed. So then as a banker, what is the precaution you will take? It will not affect your security documentation, unlike partnership and sole proprietorship. It will not affect, but we will insist on a simple document which was explained to you all.
Board resolution?
No, not board resolution. Miss.
Name change certificate.
Right, excellent. Name change certificate issued by the registrar of companies. You will get insist on a name change certificate. They can't just change the name. That such changes should be approved by the registrar of companies, who will issue a certificate confirming this name, which was earlier known as A&M Company, is now known as Z&M Company. So that name change certificate, very good, name change certificate. When executing a parate action towards the recovery of a facility in NPA, is the first option? Is the first option?
No, sir.
No,
It's like
it's the last option. It is a last option. Then what are the precautions you will take towards the acceptance of a power of attorney to execute security documents on behalf of a prospective borrower? The power of attorney is given to you. What will you do?
power of attorney has to be
the original, we have to get the issuance confirmation.
That's one. What is the other one? What's the other one?
power of attorney has to be registered.
Yes, that's okay. Then
It will be a special power of attorney.
yeah, then what is the other one? Important thing I told you all. When you get a power of attorney, don't accept power of attorney without doing, sorry? No, without doing this.
What areas will be covered from power of attorney?
Yeah, that is also there. But in addition to that, I said power of attorney, you are getting a power of attorney. I told you all, what are the, you have to do something. I said, don't ever.
Always refer to the legal department?
Very excellent. You have to refer to the legal department. So don't worry. So if you refer to the legal department, you don't have to worry. You don't have to find out whether it is registered. You don't have to worry, find out what are the clauses, what are the powers, whether it's restricted powers. You don't have to worry anything. Just send the power of attorney to the legal officer. Don't waste your time. Send the power of attorney to the legal officer and please advise the legal, please ask the legal officer. Tell the legal officer we are considering a facility for this customer who is out of the country. So therefore, his attorney who is in possession of power of attorney has come here to sign the documents, has given his power of attorney. We are enclosing the original power of attorney. Please advise us of the acceptability of the power of attorney. Send it to the legal department. Don't worry. You don't have to. You can go through it. So send it to the legal department. Get the legal department's concurrent, legal officer or a branch lawyer's concurrence, and after that, get the power of attorney to sign the document. Is it clear? Is it clear?
Yes, sir.
Title insurance should not be obtained in isolation. What do you mean by? Please explain. What do you mean? Title insurance should not be obtained in isolation. Please explain.
If there are any other way to clear the title defects?
Yeah, that's right. That is one. Yes, title. They are very good. You have to explore whether there are any other ways to clear the title.
If the title is not recommended by a legal officer, we have to get a head office or the respective authorities approval to go and get the.
Yes, that's right. Yes, that's right. Very good. If the title is not recommended, you have to get the approval from your authorities whether we could accept the title insurance. Then after that, once you are in possession of the title insurance, what do you do? I explained to you all. You have got the title insurance. What do you do? Will you allow the customer to sign the mortgage?
First, we refer to the legal department.
Excellent. You have to refer the title insurance to the legal department and get their concurrence. That's why I used the word title insurance should not be obtained in isolation. You are telling the legal officer to execute the mortgage. Now you got the title insurance. You write you are confirming to the legal division, saying that we have got the title insurance. They will say, no, is it okay? Yes. You can just tell the legal officer. But you have to send the title insurance back to the legal department and ask the legal department to go through the title insurance and confirm whether everything is in order. They have to confirm. In some banks I have seen, they are accepting title insurance in isolation and put it to the file. That is not advisable. Get the title insurance, refer back to the legal department, get their concurrence. After that only you must execute the mortgage. Then floating mortgages are always preferred due to a variety of reasons beneficial to the bank. However, on one particular asset, we always take a fixed mortgage. Define this asset and explain in brief the reason for a fixed mortgage. What is the asset?
It's motor vehicle.
Motor vehicle, we always take a fixed mortgage. What is the difference between a pledge and a mortgage?
Under pledge, ownership is with the borrower.
Right.
The mortgage, they have the absolute ownership.
No, mortgage, yes, that's right. They have absolute ownership. Mortgage
in a pledge, goods are under control of the bank.
Yes.
Mortgage, it's under control of the applicant or the owner.
Applicant. Bank has a special interest in that particular mortgage, but we have a special legal cover on that particular asset because it has been mortgaged to us. Pledge, as you said, it is under the control of the bank because, although it is under the customer's in his customer's residence, we have taken the key and it is under our control. So pledges, normally we are granting pledge loans. You can grant it under SME and all. We are granting pledge loan because these type of customers are unable to provide any security. Is it clear to you others? It's clear? Is it clear?
Yes, sir.
Granting facilities to SME sector requires close follow-up and monitoring. Explain the mechanism available to you to mitigate the risk in case of an unforeseen eventuality. When I say unforeseen eventuality, now SME you have to follow up. Regular follow-up is a must. But unforeseen eventuality means that particular customer, the builder or the SME, the person who is running the business could get injured, or he might lose his eyesight, or he might die.
Obtain life insurance.
Right. You get a life insurance cover. You get a life insurance cover, which also includes disability cover. You get a life insurance cover. If your customer commits suicide, will the insurer pay?
Yes, if the insurance is paid without arrears for more than 1 year.
Yes, if the policy has been enforced for more than 1 year, insurer will pay. Very good. So when a life insurance policy is accepted as security, what is the most important follow-up action the bank has to adhere to face any eventuality? When you are taking life insurance policy, what is the most important follow-up action you have to adhere?
Its premiums is paid.
Right. Payable of premium. That is the most important thing. You have to ensure the life premium on the life policy is paid on the due date. Whether there's money in the customer's account or not, you have to ensure it is paid. Is it necessary to carry out annual inspection on immobile property obtained as security? Please explain in brief. Is it necessary? Annual inspection on immobile property?
Yes, sir.
Yes.
If there is any acquisition happen.
Sorry?
If there is an acquisition happen.
Yeah. What else, Miss? What else? What is the other one? In addition to that, what is the other one? Why do we carry out inspection annually? To ensure
the property is in the original.
Yes. Not only the property. Yeah, very good property. In addition to that, we have to see there is any change in the environment. As I explained to you all, if the next door neighbor, if they have vacated, or if they are demolished house, and if somebody is putting up a building, if a funeral parlor is coming or a petrol shed is coming, it will have a direct bearing on the property which is mortgaged to us. So when you go on inspection, you have to check the surroundings and see whether there is any change. Is it clear? It was explained to you all. Is it clear? Is it clear?
Yes, sir.
Right.
Yes.
Now, motor vehicle is a high risk security, hence the bank totally depends on the insurance cover. Define the type of insurance you get for motor insurance.
We need to have a comprehensive insurance cover.
Very good. Yes, you have to get a comprehensive insurance cover. You have to get a comprehensive insurance cover. Define the important criteria to be adhered to prior to the execution of documents for partnership and sole proprietary concern. What is the important?
We need to see the partners' agreements.
That's right. You have to see the existence of the partners' agreement. You have to ascertain, find out whether there are any changes have taken place. The partners or the sole proprietors will have to confirm there is no change, because in case one partner has resigned, one partner has died, the documentation, that particular this thing is not valid. So even if you are taking the documentation, if there's a change, you have to re-execute documentation. So that's the reason we always want the partners to confirm there is no change to their existing partnership. If it is a sole proprietor concern, also sole proprietor has to confirm I am still the sole proprietor. So how do you track if there is a change? After granting the loan, if they go and change it, what happens? How do you change? How do you track? Before granting the loan, you check everything. Okay. So after granting the loan, if he goes and changes, what happens?
there is a clause in the offer and acceptance that if in
Very,
case
very
it should be informed.
Very good. Excellent. Well, there is a clause we are incorporating after the, in case if there is any change to the partnership or to the sole proprietorship, such changes should be notified to the bank immediately. So I'm very happy. All 40 marks, all 40 questions you all answered very well. I have made your task easier. I have made your task easier. I am the person who typed it. I just, whatever which came to my mind, I typed it. Everything was typed by me. I don't have any secretarial assistance. Everything was typed by me. So I have made your task easier. Now this first part, A and B, the questions are hidden here. Everything is hidden here. Everything is hidden here. In addition to that, you have the handout, you have everything. So there's no excuse for any failure. There's no excuse for any failure. Now I'm going to show you the, what you call the other one, the question papers. Now this is the model question paper, right? I think have you all visited this place? Visited this particular site? Have you all gone through this? Model question paper, they're already uploaded in the system. Have you all gone through it?
Yes.
Yes. Yes. Yes, very good. Now, section 1, you find section 1, you are getting 8 marks. Now here, but this time, of course, we have separated into, we have put various this thing. Now this time after, you are getting for same thing, I think. Part 1 and part 2, you are going to get 12 marks. Now you are going to get 20 marks for securities, 20 marks. So part 1 and part 2, you are going to get 12 marks. So I'm not going to read this. Why? I have already read these questions. It is already in that 40 questions. These type of questions are there, and the proposed exam also, I have already said the question paper. Those questions are also there. So you go through the 40 questions. If you go through it very carefully, you are guaranteed of 12 marks. Why? Those questions are there. The questions and answers are there. So therefore, I am not going to touch on that again. It is there. You will get 40 marks. Then after that only, you are going to get, this particular question. Read this question very carefully. And I don't think you will have any difficulty in answering this question because you have the recordings are there. When you are granting a facility, what are the first step you have to take? You have to issue a letter of offer. If it's a partnership, you have to take the partnership agreement. Then sole proprietorship, you have to get the certification of sole proprietor or partification, whatever it is. If it is an immobile property, how do you secure an immobile property? Everything is explained. The recordings are there. You don't have to worry. So here also there will be 2 questions. Now the second part, the part 3, there will be 2 questions. One question will be based on immobile property. We are, there is a, when you look at the question paper, I must warn you, when the question paper, don't look at the question paper and get scared because there is a big story given. So read it very carefully. Read it very carefully. Ultimately, it boils down to immobile and movable. Read it very carefully. One question centers on immobile property. The particular customer is giving immobile property as security. How do you secure the immobile property? Now you are the person who is going to secure it. So you have to check, you have to say, I will have to first prepare a letter of offer, then I will have to prepare their what you call partnership or sole proprietor. If it's a limited liability company, all those things are listed. Then if it's an immobile property, we have to take the title documents forward to the legal department, get the legal department concurrence. After that only we will execute the before execute the mortgage, I will call for a valuation report. I will go through the valuation report very carefully, all those things. And then before that, you have to say insurance. Remember, insurance is very important. Very important. One of the previous session, I saw one student has answered very well. One student has answered very well, but he or she has forgotten to include the insurance. So when I read it, I was convinced this particular candidate is fully aware. is fully aware of everything. But I think, you know, due to an oversight or something, he or she has forgotten to include the insurance. I reread it carefully, but insurance was not there. But still, for all, I gave the full marks. The reason is, I thought, no, beautifully answered. The questions have been beautifully answered, but I was convinced he or she would have missed it, you know, by an oversight, but the way it was prepared. So remember, insurance is very important. Insurance is very important. Then, and these are the questions. You will get 2 questions, one on immovable property, one on movable property. Then finally, you will have the security is also listed there. I will show you one, latest one. Then we will say everything is explain in brief the steps you will take in completing the security documentation, the follow-up mechanism towards ensuring the security obtained is intact until the settlement of the facility. You should identify the risk and take effective steps accordingly to mitigate all such risks. That is applicable to any of the above questions. Now you are aware any deficiency on your part will result in serious consequences in case of an eventuality, default, or any calamity. Remember the concept on every advance, there's an element of risk. Now, this particular last sentence I have put at this, every paper I put that. That is one paper. Now, this is another paper, June 18th. Now, here also, part 1, part 2, questions are there in the 40 questions, but I have given it is already there. But here, then you get part 2, RFC Garment is a partnership concern engaged in the manufacture of garments for export. It is one of the leading exporters in the country. The partnership comprises of Mr. and Mrs. H.O. Silva, husband and wife. Their garments are on high quality and they have only few competitors. All their products are manufactured exclusive for the export market. They have approached your bank for a package of facility to expand their business concern. The undernoted facilities have been approved. Now, very nice, clearly stated. You read it very carefully. You don't have any problem. One question will be how to secure an immovable property. So the examiner will take your mind through so many, ultimately boils down to a immovable property. Then movable property. How do you secure a movable property? Then explain in brief the steps you will take in completing security documentation covering the total proposed exposure of 35 million. You should identify the risk and take, now I use the word, you should identify the risk and take effective steps. Why I use the word, you should identify the risk? Because here only I want you to ensure the insurance is coming in. You have to ensure the insurance, you have not forgotten the insurance. That is very important. You are aware any deficiency on your part will result in serious consequences in case of an eventuality. Remember the concept on every advance. I am repeatedly saying that on every advance there is an element of risk of non-payment. Now this is another one. December 19. Here also question 1 and question 2 is already there in your 40 questions. It's already there in your 40 questions. Then here I will read this question at least. Question number 4. This was a different paper. Amila is a carpenter by profession, hardworking, committed, and has the ability to make excellent pantry cabinets. He does not have any assets nor security to offer. Your bank, however, has approved a facility of 1 million to purchase essential raw materials required to make 5 sets of pantry cabinets, for which he is in possession of confirmed orders. The small and medium-scale entrepreneurs sectors are considered as high risk. However, he has been approved his facility strictly on an effective follow-up and effective monitoring and follow-up, which response he has been interested in you. Explain the steps you will take in granting this facility, the follow-up action, mitigating any risk toward the safety of the advance. Everything is there in our recording. Then, in the enterprise partnership concern, engage in the business of hardware item. They are well reputed in the trade and enjoy a flourishing bit. The firm is desirous of expanding their business operations and they have been approved the undernoted facility, loan of 50 million primary mortgage over 50 million over their stocks in trade consisting of hardware, items stored at their shop premises, located in a commercial hub. The total value of stocks, they are estimated to be in the region of 100 million. Then we have the third one. Here, of course, we are given a choice out of the three. This thing, you don't have to worry. This thing, you are given a choice. This time, of course, we are giving movable and immovable. Only two. This thing we are giving. So you have to answer first and the second one. The reason is, unlike in the previous session, this time we have taken a lot of the recordings and all are very clearly explained to all the participants. So there is everything is explained, and that is the reason we have taken the difficulties what you all have undergone. All those factors have been taken into consideration in preparing the paper, because I am also human. So I also started my banking career like you all. So I know the difficulties you all have. So all those factors have been taken into consideration, and I have prepared the paper. So you don't have to worry much about it. The H Enterprise Partnership engage in the business grocery, and they have a flourishing business at their mini supermarket located in the suburbs of Colombo. They are desirous of expanding their business by extending their building complex, for which they have been approved a underwritten facility. Security primary mortgage over the existing mortgage mini supermarket complex owned by them, which will also include the proposed extension. The total value of the complex, inclusive of the proposed extension, is estimated to be in the region of well over 75 million. Explain in brief the steps you will take in completing the security documentation, the follow-up mechanism towards ensuring the security obtained is intact until the settlement of the facility. You should identify the risk and take effective steps accordingly to mitigate all such risks. You are aware of any deficiency on your part will result in serious consequences in case of an eventuality of default or any calamity which may occur. Remember the concept. I have been putting this repeatedly in all my papers. Remember the concept on every advance, there is an element of risk. So these are the questions. Now, is it clear to you all now? I must tell you all again, as I told you at the very beginning, pass mark is 51, merit is 65, distinction 81. So you will, you have to answer everything very carefully. So any questions on what we have discussed? Now this is the end of, any other questions?
Sir, I have small question.
Yeah.
When exporting, we can issue a guarantee, right?
Yeah.
As a banker. Then the exporter received the good and it was damaged.
Yes.
And the beneficiary is demanding his payment.
Yeah.
Now the bank is in the position to pay or not.
Can you repeat that question, please?
When exporting, we can issue a bank guarantee, right?
Right.
And the goods are damaged.
Yes.
And the beneficiary is demanding his payment.
The beneficiary is demanding his payment. Who is the beneficiary here?
Beneficiaries, other bank, other countries, the one who sold the goods.
So the one who sold so you have issued a guarantee for the beneficiary in that country. For the beneficiary in that country, you have issued a guarantee. You issued a guarantee, no? You issued a guarantee. You issued a guarantee. Now according to the terms of the guarantee, is it a demand guarantee? Is it a conditional guarantee or unconditional?
No, it's an unconditional guarantee.
If it's an unconditional guarantee, if it's an unconditional guarantee, demand guarantee, you don't have to wait for any reason. You can simply demand the payment.
Okay, then if the goods are damaged, it doesn't matter.
It doesn't matter because you have to find out what are I don't know whether there are any loopholes. But if it is a demand guarantee, if it is an unconditional guarantee, your liability is to pay on demand. Your lips are sealed. If it is an unconditional guarantee, if it's an unconditional guarantee, if it is a conditional guarantee, you are liable to honor only in case of they are complying the stipulations or some other terms which we have listed there, like the Asri Hospital. That is only if it is a conditional guarantee. But all our guarantees are unconditional guarantee. If it is unconditional guarantee, now we may say, at the request of so and so, we are issuing a guarantee. So we are telling them our liability is only a financial transaction. So they can demand, if it's an unconditional guarantee, they can demand within the expiry, we are liable for payment immediately. The claim is made. Is it clear, Miss?
Yeah, okay. Thank you, sir.
Claim is made. If it is an unconditional guarantee. Any other questions? Any other questions? I know you all are very hungry. Do you have any other questions? Now, I want to conclude. Before I conclude, I want to tell you another good story, and with that I am going to stop it, conclude it. When we were at HNB, HNB's first managing director, this gentleman was a managing director of HNB for 17 years. From day one, the bank started. He was the general manager, then he was a managing director, and in fact, he is the person who interviewed also. 17 years he was the managing director of HNB. Then in 1987, he decided to retire. 1987, he decided to retire, even though the board wanted him to wait, but he said, no, he must now retire. So he retired, and the new MD was appointed. So the bank gave him a gala farewell at one of the 5-star hotels. So I also was fortunate, privileged to attend that farewell. So there, in the farewell ceremony, the incoming managing director, Mr. Riyansi Vijayadevaka, he presented he came to the podium and gave a speech and presented a nice memento and said, sir, I am going to be a successor. We are presenting this memento. You find here 33 coins, he said. 33 coins. Why we have put these coins, sir? Because you are giving me a bank with 33 branches. HNB had, when that gentleman left, it had 33 branches. Today they have 250 branches. So I am taking over a bank with 33 branches. So you are handing over a profitable venture. And he presented it. Then after this outgoing MD, when he accepted it and he gave a speech. I am not going to give the full speech, but certain words what he used still lingers in my mind. When I spoke at the award ceremony also, I mentioned this. He thanked the incoming MD and he said, thank you very much. And he said, I want to give one advice to my successor and also to the young bankers who are present here. Remember, you are all dealing with depositors' money. Remember, you are all dealing with depositors' money. The moment you mishandle, you will be out of business. You remember, you are all dealing with depositors' money. The moment you mishandle, you will be out of business. He said, this is the advice I want to give to my successor and all to young bankers. What a strong word, what strong words of advice. Still it lingers in my mind, this gentleman when he told. I don't know whether others could remember, but I could remember. Remember, you are handling depositors' money. The moment you mishandle, you will be out of business. He said, this is the only advice I want to give. So today, HNB, they have 250 branches. Not only HNB, all the banks all expanded. So all the bankers like you all, young bankers like you all, should remember that you all are dealing with depositors' money. Now, this session, my session is a very important. All the sessions are important because the future of the banking industry is in your hands. So this particular batch, I have noticed a lot of valuable questions were asked. I must thank everyone and especially the people who asked questions because that made the session very interesting because everyone asked questions, very valuable questions. You all asked the questions. Some of the questions which you all asked made me also to think. Some of the questions. So very valuable questions which you all asked. And I think, I am sure if you go through all these presentations and handouts, I don't think you will have any problem in getting through this exam. Is there any questions? Even after the conclusion of the session, if you want to get any clarification, you can always give me a call. If I don't answer, that I will always. Yes.
Sir, actually, I want to give a compliment. The way you presenting and conducting the program is excellent, sir. Thank you very much.
Thank you very much. Thank you. Nice to hear, because we also get tremendous satisfaction when people are happy with our program. So it was I also enjoyed the session, because as I told you, our sessions are limited to 4, but this time I have extended up to 5. Because of the questions you all asked, and it was very, the interaction, it was very interesting. I really enjoyed. I must tell you all, this batch, I really enjoyed, because when I didn't even feel that I am addressing a blank wall, because there was so much of interactions and clarifications and the questions. It was very interesting. Even if you ask me, I can even go on till 6 o'clock, but it was very interesting. So, if you have any questions or any clarification, you can always contact me. I think my number, 07777 66540. You can always give me a call. And if I don't answer, I will definitely return the call. I always return my call. So if there are any other questions?
So rather than a training program, actually we learned a lot from you, sir. You are a very veteran banker, and I must, we as a team, we all appreciate your efforts to teach us something. I mean, it's very practical session, because of your experience you gain from so many banks, and thank you very much for the commitment, sir. I know that you have sacrificed your time and everything to give us something extra, so thank you very much for everything, sir.
Thank you very much. I'm very happy to hear the nice words of appreciation, because I'm really happy. So this it was a very interacting session. Every session I really enjoyed it, because I take as I told you all these PowerPoint presentations were made by me. Now this is even in this presentation there are certain amendments I have made, certain additions which I have brought in, all typed by me. I must tell you, everything was typed by me. I have not utilized any. I don't have any secretarial assistance. I don't have any secretarial assistance. I went through it very carefully, and I have added some spices to this particular session also to make it glamorous and more attractive and interesting. So before I conclude, I must thank you all, thank each and everyone, and especially the people who asked questions, which would have given immense benefit to all the participants. And it was a very interesting session. So I am hoping to see you all. And I must tell you all, I think IBSL is going to have the exam very soon. Now the government has opened up. So very soon they will have the exam. Only thing is the inter-district restriction is still on. Once the inter-district restriction is removed, I am told they are going to have the exam. So once the exam is over, now we are going to have another challenging time, because we had to correct about, I had to correct about, not only I, all the others, their respective areas, we had to correct about 400 papers, because 200 from 180 from this batch, 185 from the previous batch, all will be combined, and they will have the exam for both batches at the same time. So if you have any questions, you can always contact me, and thank you very much for the nice compliments you all have made. I am hoping to see you all in person at the awards ceremony. So thank you very much. Stay blessed. God bless you. God bless you, and thank you very much.
Thank you, sir.
We have sharpened our knowledge with your.
Thank you, sir.
Thank you.
And
Thank
also,
you very much.
so please let us know the IBSL contact person to buy this book.
I'll give the number. 1 minute. I'll give the number. I think I gave the number earlier, but today I off the mobile. I'll give the number. His name is Suresh. In fact, yesterday or day before also I spoke to him, and he told me some people have contacted, and I asked him what is the mechanism. He said he will tell them to credit the account with the postal charges. He will mail it. His name is Suresh. My mobile is just.
So even after the exam, please allow us to contact you. For...
Yes, you can always
Because we have a lot to learn from you, sir.
No, I think I may have trained for more than 5,000 people would have gone under training under me. Now this Suresh's number. There are about 4 or 5 Suresh in my things. I must ensure that I give the correct. Right. Suresh, IBSL Suresh, his number is, make a note of this number, 076 00 69 160 076 00 69 160. He's a nice boy. Yeah, you can speak to him. I have already spoken to him. You don't have to go to IBSL. He will arrange to send it, mail it to you. If you are interested in buying the book, you just speak to him. He will tell you how we have to remit the money. So thank you very much again.
Thank you so much, sir.